going on? Spider, Harvey, uh-oh. What went wrong there? Something went wrong there. Florida, what's going on? Harvey Nelson, what's going on? Geoman. Resume. I don't know why I got kicked off there for a second, but okay, that works. Florida's going on. PB Man. Kevin, what's going on? Shammy. Teamy. T-me. All right. T-me. Jaw. Dana. All right. Shoot. You look like the guy who talks to us about options. Cool beans. Could very well be. I might be him. One love. One love. One heart. Let's get together and feel. Oh, Daniel. Surrender. Milton. Electric Arnie. All right, Glenn. What's going on, Glenn? Let's cancel that. We don't need that. What do we have going on over here? What's going on? See me. Feel me. What's going on there? Xylo the Fury. What's going on, Xylo the Fury? One love. Yes, sir. Laurie, good evening. Much love. Daniqua. Caro. John Cooks. Michael Mikuchi. Okay. Kenny. Dennis. J-Bo. Bonovo. Lumina. Good evening. What are my thoughts on FDX? Well, let's get rid of the fishies. Bye, fishies. Bye, fishies. There we go. So what do we want to look at first thing this morning? This evening, FedEx. FDX. We all know who FedEx is, right? So the other day, I was tickling my baby brother's feet, but then my mom stopped me and said, not right now. That is a horrible thing to say. Day to day, what's going on? Phantom, Papa Jim, James Washington, Kevo, what's happening, Kevo? Renee, PBA man, what's going on? What's a good investment right now? Good question. Marty Bentley, Alan, Super Tech. Hey, Botox Docs is in the house. What's happening, Doc? All right, so let's take a look at FedEx, and the very first thing I want to take a look at is this right here. You ready? Look at this. That looks nice. Now, anytime I look at a stock, I always look for the exact same thing. Where's the high? Well, that is right here. Where is the low? Well, that is right here. Where was it a year ago? Because we're looking at the 1 year chart. A year ago, she's right here. Where is she right now? Right here. Okay, so what was the motion for the year? We'll take a look. Okay, up, down, up, down, up, down, up. Okay, not that difficult. Definitely an upward trend at the moment. The bottom being here, the high being here. So where are we? We're here, going to the upside. We're at 233. That's the big number on the board, 233.13. 233.13. 233.13 everywhere. So if I'm going to look at FedEx tomorrow, am I liking it at 233.13? That's the price. That's the question. Alan, good evening. Marty Bentley, Super Tech. Mama, don't let your babies grow up to be cowboys. Okay, so the 233, there isn't a 233, but the 232.50s go for 315. So that is a yes. That number looks good, and it actually looks good for this week, which is very strange because we only got 3 days left for this week. Wednesday, Thursday, Friday. Now, we don't normally get 1% on Wednesday. Okay, right here. That is more than 1%. So let's take a look. Do we like FedEx? That's a big question. Adam, Norm, what's going on? Mickey D's. We'll take a look at Mickey D's in a minute. Rob, Mark, Leak Shield Con. Mike is in the house. Steve all day. All righty. Sellout, Dark Mountain. Dark Mountain, sellout. What does that mean? Vernon Rogers, hello, hello. All righty. That being said, let's take a better gander at this. All right. So a year ago, this company, FedEx, is at 287.60. We have a double high for the year, once the end of September and again the end of November. And that's right at the 302 area. So 302 is the high of the year. Drezik, hold on a second. Dennis, how you doing? So if the high of the year is 302, the bottom of the year right here in the second week of April, well, that's 194. So 302 to 194, that's a $100 drop. Okay, 302 to 194, okay, that's over $100. That's more than a 30% drop. Okay, well, here's the bottom. Here's the top. Here's where it was. Here's where it is. Look at the motion. Up, down, up, down, up. It's definitely in an upward trend at the moment. So what does that tell us? Well, it tells us it's in an upward trend. That's basically all it tells us. So is it the right time to jump in to FedEx? Well, that's always going to depend on what it is you want. What is it that you're looking for? What do we have over here? Vernon Rogers, what's going on? WYD. What is WYD? I have no idea. All right, so definitely looking at the numbers, look. Up, down, up, down, up. It's definitely in an upward trend. 233, looking at 315. Now that's more than 1%. That's what I'm looking for. For those of you that are new here, my name is James. This is Dividend Stock Talk, where I invest in dividend stocks for weekly cash flow. Now, unlike most investors, I'm looking to get cash flow on a weekly basis. I don't day trade, okay? I don't do Forex. I don't do futures. I don't do quick contracts. I don't do cryptocurrency. I don't do a lot of things. But what I do, I like dividend investing. Because if a company is profitable, they will share their profits. And I'm retired, 61, so I need cash flow coming in on a regular basis. None of this once a month crap. You get Social Security check, great, it's gonna last you the whole month. Yeah, that doesn't work very well for me. Terribly sorry, I got a spending habit. I like to spend money. I do. I like to go out, I like to buy stuff. I do. Okay, I find it as a treat. I worked all week, let me go buy something. What am I gonna buy? Who knows? Something to make me happy for 5 or 10 minutes, then boom. Throw it out, donate it, do something with it. But no, I like to buy stuff. Anyway, and I like having my bills paid. That being said, what I am doing with my money is very important to me because I don't want to have to go back to work. Why is that? Okay, I get all that stuff. Phones telling me all this kind of weird stuff. Ken. Mike Easton, Blaine, L.A. Draper, Coegfont. Okay. See, some questions I'm not even going to pay attention to. So this question here, I'm just going to delete this guy because I honestly don't want to be dragged into your drama, okay? So let's just get rid of this dude. Oh, yeah, lovely. Now I can't get rid of him. All right, whatever. He is still doing this. Mickey, how are you today? I love charts. I do too. Okay. Do you have stocks in Bang? Oh my God, I know who those are. You know what I'm going to do? I'm just going to move that. I'm just going to delete that person. I don't want to deal with that crap. Heart matters. I'm completely out of the stock market. Everything, every single sign is showing that we are about to have another 2008 level crash. Cool, that ought to be fun. Clean your glasses and wipe them good. Okay, I don't know why, but alrighty. Would you rather? Okay, I'm interested in understanding about what you do. All right, just hang tight. I'm going to get to it. is the name. Okay, so I'm going to delete this one too. I don't want to deal with that. I need a moderator over there. Just get rid of those people. Yeah, those people. Yeah, the ones that aggravate me. Can you explain it to me like I'm super done how it works and what are the risks? Wow. Dymophoric. Can I explain it to you like you were super dumb how it works and what are the risks? How it works. You're going to take some of your money that you have saved up, you're going to invest it into something that you believe is going to grow to a point that gives you what you are looking for when you retire. Okay? What I'm doing here is I'm buying a company, holding on to it for 4 or 5 days, grabbing 1%, saying, thank you very much, and then going on to the next company and doing the exact same thing, week after week after week. Me again, Scout fan. Those glasses are filthy. Thank you, Mike. Thoughts on Meta? Lost 200,000 on them. Well, serves you right. I don't buy them. Am I rich? I believe that I am. Okay. Good day to you, sir. Well, good day to you too. All right. Nvidia is the way to go. Correct. I'm going to disagree with you, Dalton, because Nvidia doesn't have what I'm looking for. Okay. What I'm looking for, Dalton, are companies that are consistently profitable and share their profits with their investors. Nvidia is like, was it 185 bucks? Good evening, sir, from Brooklyn. Gene, good evening to you too. So Nvidia, last I checked, was like $185. They pay a 1 penny dividend. Think about it, 1 penny dividend, $185. Collect 1 cent every 90 days. That's 4 cents a year. That is less than 0.01%. 0.01%. Not a 1%, not a 0.5%, a 0.1%. 0.1% is what they're paying. Okay? The book value is $3.66, pretty much to it. Fuzzy! They were just $5 a share 4 years ago. That's probably where they came out with that 1 penny dividend. 1 penny dividend, that's 4 cents. That makes sense. Gene, thank you for that. All righty. Can you say hi? Can you say hi to my little friend? REITs, are they good? Okay, Williams, always depends on what REIT you're looking for and what are the goals of that REIT. Makes sense. All right. Woohoo, Gene, makes sense. All right. So I have, just to let everybody know, 6 screens, which means, Gene, can you do that just once or twice? Thank you, Gene. That's enough. Okay, I got the message. Thank you. Okay, I got a lot of things going on, which means there's a lot of activity and a lot of questions. So if you have a question, please ask it just once. I will try to get to every single question. More than likely, I'm not going to be able to because there's too many questions coming in. I can't get to all of them because I could sit here for 3 hours and just answer questions and not show you anything. All righty. So what do we have over here? Thoughts on Exxon Mobile? Ooh, Gil, Exxon Mobile. All righty. User 611-811-808-635. Do you put your trades in your Roth? No. What platform am I using? I am using Think or Swim, which is owned by Charles Schwab. Okay, which stocks are the best to do what you're doing? Mindy, I'm looking at Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend. I forgot to. Oh yeah, hold on a second. I forgot to turn this camera on. Forgot to turn the camera on. Come on. Okay, get rid of that. Streaming. Stop recording. Okay, hypothetically speaking, we should be. All righty. And there we go. We should be streaming now. Do you play Roblox? No, I don't. Squirrely! I stumbled on this channel. I'm looking forward to showing my daughter the markets. She likes to watch the candles move. Cool beans. My 9-year-old daughter said, Daddy, what are you doing? Can you teach me? That's it. Can you teach me? 9-year-old little girl wanted to learn how to trade the stock market. Rain, go away. All right, Joshua, thank you for that. Which stocks are best for what I'm doing? I told you the Dividend Kings, Aristocrats, Champions, Contenders, and Warren Buffett's list. Those 5 lists right there will give you about 300 different companies to look at. We look every single week. We look to see how many stocks are available to trade. Well, this week it's 10,340. Well, that's a lot. How do you decide which ones you want to see? Well, I only want to look at companies that are consistently profitable and have weekly options because I like that weekly cash flow. It's kind of like working again. You go to work on Monday, you're done on Friday, and you pick up your check on your way home. That's why I like that. Mine 4 and 2, but we'll get there. Take your time. Enjoy them while they're young because once they get to a certain point, I'm thinking like 10, 11, 12, boom, they're out of your control. Your friends and Madonna and what was that? YouTube. What was that other one? VH1, MTV. There it is. MTV, VH1, YouTube, the internet, social media. Yeah, you're gone after that. Okay? All right. So basically, get into an ETF that has high dividends. Dalton, oh, hell no. Dalton, you give me one ETF. We'll take a good look at it, and I'll give you my opinion on it. Can we look at Samsung? Okay, Brian, give me the ticker symbol for Samsung. We'll take a look at it. Okay. Beastly dividends. International stocks that are good. What's a good exchange or brokerage? I use Thinkorswim. Z wants to take a look at QQQI. Now, we looked at QQQI a while ago and said no. How should a trade build their trading psychology? Well, if you're right a lot, that helps out. Exxon Mobile, stock, buy or sell. Gil, hold that thought for a second. We're on FedEx. We did FedEx already. Okay, so let's finish up with FedEx. All right, let's hold up questions, and hold up questions. All right, FedEx. High, low, look at the movement right there. Currently at 233. 232 is right here, 335. Great, that's more than 1%. So let's do a trade on FedEx. Jump right on in. I'm going to throw you into the deep end, see how well you can swim. Are you ready? FedEx, we all know who they are. Okay, let's get rid of this. Let's change this to covered call. See, what I'm looking for is a simple, safe, predictable trade. Well, I already know everything I need to know when I want to do a covered call. So 233 right there. There it is. One contract. Let's do just one. That way you know how much money you have available. So can you do 1? Can you do 7? Can you do 15? How about 28 of them? Can you do 28? I don't know. I have no idea what amount of money you have available to you. But if I'm showing you just one, you should have a good idea saying, hey, I have X amount. I can do 5. I can do 2. Whatever. All right, so here we go. Buy 1 covered call FedEx 100. That's the weeklies. 22 August. That's this coming Friday. That's 3 days away. All right, hold on. 232.50 call option on FedEx at the market to open. Now I'm doing 2 trades. To open means I'm buying the stock. To open means I'm selling the option. One of those trades is going to New York. The other trade is going to Chicago because that's where options are usually traded. Chicago Board of Options Exchange, CBOE.com. CBOD.com. Chicago Board of Options Exchange. That's where all the options are being traded. So if I want to take a look at who has an option coming up, CBOE.com tells you exactly who's coming up. Anyway, let's continue. So if I'm buying one, here's the maximum profit right there, 262. Now, if you ever heard me saying, hey, I'm looking for a simple, safe, predictable, and consistent trading idea, okay, well, predictable means I want to know what I'm going to make before I even do it. Right here, my maximum profit on this trade is $262. I already know what my profit's going to be before I even put in 1 penny. Well, that allows me to take a look at a calculator to say, hey, is this worth my time and effort? Well, is it worth your time and effort? Well, what is your strategy? What is it you want to do? Me, I want 1% every week. Simple. I want to put my money in a safe environment. Well, is FedEx a good company? It's a good, valid question. Do I like FedEx? More importantly, do I like FedEx at this current price? Where is it? Right here, $233.13. Do I like FedEx at this current price? Am I willing to buy it and hold on to it until it hits my target? Well, what's my target? Okay, if the stock is currently $233.13, my target in this situation is $232.50. Wait a second, that's less than what the stock's at the moment. Does that make sense? Think about it. If I buy it at the current price, $233, and I sell it at $232.50, how does that possibly make sense? Because the premium that I'm collecting is big enough to offset what I'm paying for it and then selling it at a loss, which means I'm still walking away with a profit. I mean, think about it. If I'm buying it at $233 and I'm selling it at $232.50, well, I'm losing 50 cents off the bat. Well, 50 cents off the bat, that's being covered by whoever is paying that premium. And that gives me more than a 1% return. So if the stock goes up, I make my money. If the stock stays the exact same, I make my money. The stock can even go down and I still make my money as long as it is above $232.50 by Friday. That's 3 days away. Well, it's in an upward trend at the moment. Remember the chart we looked at? It's in an upward trend. So how difficult is it for it to stay above $232.50 between now and Friday? That's one of my favorite trades. The stock doesn't have to move at all. In fact, the stock can even go down and I will still make money. That's what I'm looking for. Simple, safe, predictable, consistent, no way for me to lose. So if I'm buying it at $233.13 and I'm selling it at $232.50 and it's in an upward trend, well, and it's FedEx, we all know who they are. Does it sound like everything is in my favor? Well, it sounds like it to me. Does it make sense? That's the big question. By the end of the night, I want you to ask yourself that question. Does it make sense to me? That's it. Is this a safe place to invest my money? I'm not asking you to invest in Sally Seashells, something you've never heard of before. Pete's Platform Shoes. No. FedEx. Come on, you've seen the trucks go by. You know who they are. You know what they do. Well, in this instance, $233.13, selling it at $232.50, walking away with over. Well, actually, let's find out exactly what we're walking away with. Because to find out what we're walking away with, we need to do a little bit of fancy math, right? So if I buy the stock, sell the option, what am I walking away with? What do those numbers look like? Okay, so here's the trade. Here's my profit. Here's my investment. What do those numbers look like? Okay, so if the maximum profit is 262, okay, 262 in the calculator, and we're going to divide it by the cost of the investment, including the commissions and fees, $22,988. $22,988. And that comes to a grand total of, well, no, that's weird. The calculator don't want to work. Let's try one more time. Give me another calculator. Here we go. Another calculator. 262 divided by 22,988, grand total of 1.1%. Well, think about it. I'm buying it at whatever the hell that price was. I'm selling it for less than I paid for it. And I'm still walking away with a profit of 1.13. Well, that's more than 1%. 1% is 50% per year. And how long does it take? 5 to 10 minutes. 5 to 10 minutes every day. It's less than an hour a day to make 1%. Now, I know it doesn't sound like a lot, and no, it's not a lot until you have something to compare it to. Well, what are we comparing it to? Well, how much is in your account? If you got 50,000 in your account, 1% is $500. So if you spend 1 hour, 5 or 10 minutes a day for a week, well, Monday, Tuesday, Wednesday, Thursday, Friday. So you buy on a Monday, you sell on a Friday. That's, 5, 10 minutes, 5 times a week. That's about an hour. If you got 50 grand in your account, that's $500 for 1 hour of your time. Think about it. Now, you may be starting out with a smaller amount, 5, 10, 15, 20,000. Well, you can't get to 100, 200, 300,000 until you start. You got to start somewhere. Okay, maybe you're 50, 60 years old and you're thinking about retirement. You want to take the money out of the IRA and you want to self-direct it, which is perfectly legal. You can take your money out of that crappy 401k. I wouldn't do it if the company's matching. Okay, if the company is matching you, all right, if you're putting 6%, because they have a max. Okay, maximum contribution is 6%. So if you're maximum at 6% and your company that you're working for is matching that, well, that's 100% return for every dollar you put in, they put in. That's 100% return. You can't beat that. Really, you can't. But what you could do once they stop doing that, you can take what's left and put it into a self-directed IRA, which you are in charge of. But 2 things are going to happen because you're going to have a choice of 2. Not 3, not 5, not 102. No, 2. 1, 2. That's it. Flip a coin. When you retire, you are either going to invest the money yourself, take responsibility for your own money, your own accountability, or say, I don't want to do it, you do it. Give it to someone else, and someone else will do it for you. However, I can almost guarantee that nobody has as much interest in your money than you do. So why would you give up accountability giving it to someone else to invest for you? Now, don't get me wrong, because I invest money for people all the time because they have enough where whatever I make them, they're perfectly happy with it. Actually, they're more than happy with it. Anyway, ooh, that's a good one. Let's keep progressing. So FedEx is offering 1.1%. The stock has to do absolutely nothing. Go up, stay the same, even go down, and I'm still making over 1% on FedEx. If, of course, do you like FedEx? That's the big question. Do you like it? It's a yes or no. Is it a company in which you feel safe investing your money into? That's a big question. Okay, so Z wants my opinion on QQQI. Now, Z, I'm not even going to put it in. Well, let's take a look. Hold on a second. Put that there. Let's get rid of this. Let's get rid of that. Let's go back to here. Let's go back to here. And let's put up QQQI. QQQI. I'm going to say no right off the top. Besides the fact that QQQI probably doesn't have 2 decades of increased profits. Probably doesn't, because it's probably just like QQQ or QQQL, QQQP, QQQT, whatever. But anyway, besides the point, I don't do these because 19 September, 17 October, 21 November, these are months of the year. I do not do monthlies because they just don't work for me. All right, I want weekly cash flow. I want 1% every single week. QQQI that pays monthly. What does that mean? Well, let's take a gander at it. The current price is 53. So 53 is paying 35 cents. Do you see that? 35 cents on a $53 stock. Do you know what that means? That is less than 1% for the month. So you want me to invest in this and get less than 1% for the month, which, by the way, is less than 12% for the year. Why the hell would I do that? If I'm getting 1% a week, that's 50% a year. Okay, QQQI, 35 cents, that's not even 1% for a whole month, which is 31 days. Yeah, no, hell no. All right, Fuzzy wants to take a look at Apple. He did spell Apple wrong. I'm not quite sure if I should let him get away with that one or not. But here we go. Apple. Now, I do own some Apple. Wait a minute. No, I don't. I sold it last week because it jumped up. I mean, think about it. It jumped up. Take the profit and run. AAPL. Okay, take a look. Not the time to jump into Apple. Okay, high, low. Look at the motion. Up, down, up, down. So it's currently in a downtrend. Okay, if you like Apple, you missed the boat right here. See, we jumped in. When I say we jumped in, well, I have a morning trading group. We trade every morning. We get together and we look at what are opportunities that look good to get us a simple, safe, predictable, consistent 1% for this week. And about 3 or 4 weeks ago, Apple looked very promising. So we jumped in at 205 right here. Took this up to here, and at this point, no longer worth holding on to it. So bye-bye. Got my profit. See you later. And in a couple of weeks, when this comes back down to here, I will jump into Apple again. As a matter of fact, let's write Apple down 2 weeks from today. Look at that, right next to Kimberly Clark and Pepsi. All right, what's a good brokerage? I use Thinkorswim, which is through Charles Schwab. I trade futures, okay, and used to do options. All right, I used to do futures. Don't do them anymore. Dixie. I'm not going to even entertain that one, Dixie. Long time no see. Good to see you're streaming again. How's your investments nowadays? I'll catch up with you slowly. All right. Thank you. Hey, Jason. I have no idea what that means, Jason, but you have fun with that. All right, let's keep on going. Which stock's the best to do what we're doing? We already talked about that. All righty. APLD. Tiger. But Wyoclip wants to take a look at APLD. APLD. No. Imagine that. No. I don't buy at the high of the year. I really don't care what this looks like. Okay? It's at the high of the year. Why the hell would I buy? Hey, the stock's at the absolute high of the year. Let's buy it and wait for it to go higher. Does that make sense? No. You make most of your money buying low, selling high. Not buying high and waiting for it to go higher. Yeah, no, thank you. There are too many other companies that are already in the perfect position to do something. Not that. Okay, Tiger, UPS. We looked at FedEx. Why not look at UPS? Ooh, look at this. The low of the year. You cannot get any lower than the low of the year. Remember that? Hey, you want to make money in the stock market? You buy low, you sell high. Well, guess what? You can't get any lower than the low of the year. Can't do it. You cannot buy any lower than the low of the year. And that was last week. Well, where's it going now? Well, think about it. The high of the year is 145. That's back in November of last year. Then she drops, goes sideways, drops again, and here we are, the bottom right there, and we're bouncing off it. So let's zoom into that and take a look. Here's your last 30 days. Okay? Up, down, sideways, but a very slight upward trend. 87.80. The 88s are going for 82 to 88 for this week. That's just 3 days. And if you don't like that one, you can do this one right here. Oh, hold on. Easy to do this, right? Get rid of that one and do this one right here. All right, so this week, 3 days, we're getting 82, which is a tiny bit below 1%. But next week, the 88s are going for 1.5%. Well, that works if, of course, you like UPS. So let's take a look at UPS and see what it looks like. All right, so let's get rid of this. Let's go to covered calls right there, the 88. Gonna need the glasses for this one. 88 right there, one contract. Now remember, doing one contract, you're buying 100 shares of the stock and you're selling one contract because one contract equals 100 shares. Okay, at the market, and here we go. Buy one covered call UPS 100, that's the weekly. 22 August, that's this coming Friday. The $88 call option, which means I'm going to buy it at the current price, $87.80. Well, if the current price is $87.80, the closest strike price is going to be 88. So if I buy it for $87.80 and I sell it for 88, well, I'm collecting a 20-cent difference between the purchase price and the sale price. All right, it's 20 cents. Not a big deal. Not the driving factor. This is right here. $112 per contract. So each contract I get, it's $112. So if I get 10 contracts, that's $1,120. Does that make sense? However, is UPS a good investment? Is it someplace you want to put your money and just say, you know what? If you're going to give me $100 every single week until I hit my target or I sell one or the other, does that make sense? Because think about it. If I buy it 87.80, sell it at 88, I collect this per contract, and if it hits that, I get my money back for the stock and I get that profit. Well, profits are much better than wages because guess what? You can only work so many hours a day. Profits, there are no limits on how much profit you can make. Okay, let me say that again. When it comes to wages, you're trading your time for dollars, and you only have 24 of them every day. You only got 24 hours in one day. So if you're trading your time for dollars, you're limited on what you can make because you only have 24 hours. And no, you cannot work 24 hours a day. You just can't do it because you need rest, you need nutrition, you need to focus, you need a lot of things on a daily basis. You can't work 24 hours a day. So profits are better than wages. So you think you get ahead by getting a better job? No. You're just getting more money to trade for your time. Profits are better than wages because there's no limit on profits. There are limits on wages because you're trading time for wages, which means if you're trading time for money, you can only trade so much time because you only have so much. That's it. Anyway, besides the point. So 112.86. Let's do some quick math. Does it make sense? 112 divided by 86.88 comes to a grand total of 1.28. Well, FedEx is paying 1.1. UPS is paying 1.2. Which one do you like better? FedEx, UPS? Well, don't they both do both the same thing? Deliver packages? Which one do you like? Why not both? Why not put a little here, put a little bit there? You just don't know. All right. Next. Gil wants to take a look at Exxon Mobile. Exxon Mobile. X-O-M. Exxon. Check it out. High, low. Where was it? Where is it? Look at the motion. Up, down, up, down. Here we are right here. 107.42. 107.42. 107.42. The 108s are going for 63 for this week. No. 107s for next week. Sorry, 108s for next week. 131. Yeah. It looks good for next week. Not this week, but next week. This week we got 3 days left. Very rarely will you find you can get 1% for 3 days. Rarely. But you can get it for 1 week. So let's see what Exxon Mobile looks like. Last 30 days. Okay, check it out. Last 30 days. Down, up, down, up. So it's slowly going to the upside. Right now it's at 107. So what does that look like? Well, let's find out. Get rid of that. Covered call. 107. There it is. One contract. Market. And we go. And there it is. By one covered call. Exxon Mobile. 29 August. That's not this week. That's next week. Okay, so this option here, this trade expires next Friday. 29 August. Okay, 107 call option. I get the mark at Exxon Mobile at the market to open. Here's profit 145. 10,000 is the investment. What rate of return is that? Well, what rate of return? I mean, think about it. If you're going to invest, you need to know the terminology. You need to know how to do the math. So if my profit is 145.50 for one contract, 145.50, calculator, okay, divided by the investment, 10,555, grand total of 1.3%. So we just looked at 3 stocks: UPS, FedEx, Exxon Mobile. 1.1, 1.2, 1.3. Well, there's 3 decent companies right there. Exxon Mobile, they've been in business for over 100 years. We know who they are. We know what they do. FedEx, UPS, we know who they are. We know what they do. You got to ask yourself the question, do I like these companies? Am I willing to put my hard-earned money into these companies to get a safe, predictable, consistent return on a weekly basis? Now we're all different. We all have different goals. We all have different ideas. Okay, we're not all on the same page, but we're kind of all going in the same direction because we're all looking to take some of our money and put it someplace safe to get a return from. Now, I realize I'm just one person on the internet, and there's probably hundreds of people out there just like me saying, hey, my system's the greatest. Mine's not the greatest. It's not. It's kind of freaking boring, monotonous, slow as hell. But guess what? It's safe, it's predictable, and it's consistently accurate. So if it ain't broke, why fix it? Now, take this in mind. Take it for wherever you want to take it, okay? This here, investing your own money, great. That is a very sliver, a very tiny section of your life, very small section. What do I do with my money? You need to put it somewhere. There's so many other ways of doing things. You got to find what's right for you and then go along with your life. Because money, as important as it may be, because it is, we're the only species here that have to pay to live here. Think about it. The only species that's got to live on this planet, and we got to pay to live here. The only one. So how much money you have and how much IP looks decent. Eric, we'll take a look at international paper in a second. It just popped up right here. Like, cool. So that being said, where is a safe place for you to put your money? And then after you figure that out, well, great, go live your life. Hang out with your family, your friends, go do things, contribute to society. This is just a very small section of your life. And if you get this part done, if you get the money part under control 5 or 10 minutes a day, well, you have the rest of the day to do whatever you want. Think about it. 10 minutes a day takes care of the money. Well, that's awesome because you have the next 23 hours to do whatever you want. Something like that. Okay, so that's three we just looked at. All three of them look pretty good. All right, so Eric would like to look at international paper. Do we have any objections? Nope, don't hear any objections. International paper, here we come. International paper, IP, here we go. Ooh, interesting. High, low, where was it? Where is it? Up, down, up, down, up. What's going on here? This is the local, this is the area what we're looking for. This right here. Because this is today, yesterday, day before, day before, day before. This is what's happening now. Now, this over here just gives me a rough idea of the motion of the ocean. What does it look like? Well, it went up, it went down, it went up, it went down. Where's it going now? Now, it's not that big of a move because you got 44 here and you got 60 here. What is that, 16 bucks? That's it? That's all it's showing. That's all the movement for the whole year. $16 move. That's not a whole heck of a lot. Think about it. The high is 60, the low is 44. That's not that big of a move. But let's keep on progressing. All right, so the current price, 47.32, big board, big number on the board, 47.32. We'll be looking at the 47.50s, which you get 1% this week, and you get close to 2% for next week. So you got to decide which one makes more sense. Doing a trade for this week, it's only 3 days left, Wednesday, Thursday, Friday. Can you get your 1%? Maybe you can. Or do it for next week, close to 2% right here. Maybe. But it's always going to come back to that big, huge question. Does it make sense? Do I like this company? Think about it. There's over 10,340 companies this week. They keep adding them. Every single week they keep adding companies over and over again. Now they're going to be adding my company next year. Okay, next year, my company will be available. And then you're going to be saying the same thing. Oh, hell no, I'm not going to invest in a company that's only 1 year old. It is what it is. Okay, I got to start somewhere. I started 2 years ago. And at the end of this year, it will be a complete 2 years where you can take a look at every single trade I did for 2 full years. Okay, backed up by video because I do every trade live so you know exactly what I'm doing. So when I do start my company and I offer you, hey, you invest in my company, I'll guarantee you 20% every single year. And then you think, wait a second, I've watched this guy over the last 2 years. That's what he's doing. Well, yeah, you've seen what I do, so you know what my company's going to do. We're going to do 20% every single year, guaranteed. Okay, fine, great. How are we going to do that? We will find out, won't we? All right, so that being said, here we are. Let's check it out. A year ago, international paper, 47.48. We topped out the year in the end of November, and that's 60 bucks, $60.40. Now we bottomed out in the second week of April, just like everything else did. You got somebody saying something stupid and everybody panics. They run for the door and you have this new universal low on everything. Just about everything has a bottom in the second week of April. Okay, the man in the big chair says, hey, tariffs. And everybody panics and then they sell and then the stocks drop and you get this big, huge... I'm trying to think of a good word to call it. Because it's on almost every single stock. Almost every single stock you see the second week of April of this year will have a low. Because almost everybody panicked. Trump's saying tariffs. The world's going to end. Let's sell off everything. Right there. That's the date. I call it TDS date. Trump derangement syndrome date. Because everybody panicked. Well, why? You panicked and look what happened. It went from here and it shot way up. What's your reasoning? Did you panic on that day? I didn't panic. I was like, whatever. I've seen it way too many times. Now, I've been investing since the early 90s. So I've been investing for a long time. I've seen the crap and the crash in the 2000s. Remember the dot-com crash in the 2000s? Yeah, I was there for that. Do you remember the Y2K panic? Yep, I was there for that. Do you remember the financial crisis in 2008? Yep, I was there for that. Do you remember the big, huge pullback, the what do you call that? That pandemic jabby thingy? Yeah. Do you remember that? Yep, I was there. I seen it all. I didn't see everything. I mean, I only started investing in the 90s. Okay, now I did see the crash of 87. I wasn't in the market in 87, but I did see it. Okay, but here we are now. Here's your high here, and then she's bouncing up, going up there. So let's take a closer look. Okay, so the last 30 days, here you go. Now, the reason I like to look at the last 30 days, which is the last 1 month, well, when we live our months, well, we will, we live our lives 1 day at a time, 1 week at a time, 1 month at a time. So which is the best charting scenario to give you a good idea of how to achieve your goal? Well, my goal is weekly cash flow. So last week, okay, this information here doesn't really give me a lot to go on, you know, up, down, up, okay, but it's only 2 weeks. You have to figure out what works best for you. For me, it's 30 days. Look, it's the last 4 months, last 4 weeks. Up, down, up, down, up. Well, the bottom is here, and it's definitely going towards the upside. That's what the numbers look like. And this is the last 30 days, which is the last 1, 2, 3, 4 weeks. So the last 4 weeks, what does it normally look like? Well, you can only have one high in the 30-day period. You can only have one low in the 30-day period. How do stocks move in relationship to those? Well, it goes up to the high. Okay, there's what's called profit taking, retracement, correction, pullback, whatever you want to call it. I'm calling it profit taking because if the stock is here at $50, shoots up to 56. Now, from 50 to 56, that's a $6 move. A $6 move on a $50 stock is over 10%. 10% move, yeah, profit taking, here we are. So now we're down at 44. So 44 to 49 is $5. $5 on a $45 stock. $5. Well, that's over 10%. See? 10% profit taking. 10% profit taking. What's happening now? It looks like she's going up again. That's what it looks like. Is that guaranteed? No. There's only 3 guarantees in life. And most of you know 2 of them. Very few people know what that 3rd guarantee is. So, do I like international paper? Is it something I'm willing to invest in? Well, let's take a look. 47.32. Let's look at the 47.50. Okay. What was that? I heard somebody yell something out. Who was it? All right. Covered call. 47.50 right there. I'm going to do this one right here. 47.50. One contract. Just one contract. Here we go. Buy one covered call, international paper, 29 August. That's not this Friday. That's next Friday. That's 10 days away. 10 days. What do you think is going to happen in the next 10 days? 47.50 call option against the stock at the market to open. Here's the profit, 108. Here's the investment, 4,600. What does that look like? Hold on. I'm going to give you a little bit of a... hold on. I forgot what I was saying. Don't get old. It's no fun. All right. Calculator. 108 is the profit. What is it costing? 46.42. 2.3%. 2.3%. If 1% a week is over 50% per year, 2% a week should be over 100% per year. Well, think about that. How often do you double your money? Think about it. Let's say you got 20 grand and you put in 1 hour a week. Well, 1 hour a week is only worth 1%, but here it's worth 2. Imagine that. 1 hour a week, you could double your money at the end of the year. Well, guess what? I hate to be the bearer of bad news, but next year's coming, whether you like it or not. This Friday is coming, whether you like it or not. Whether you do something or not is totally irrelevant. It doesn't matter. You can do absolutely nothing. But Friday is coming. What are you going to do about it? Tick tock, tick tock, tick tock, tick. And you ain't stopping it. Ain't nobody stopping it. Okay? All your money won't another minute buy. Dust in the wind. That's all we are. We're dust in the wind. What are you going to do while you're here? How are you going to impact your life? What kind of example are you going to set for your kids, your family? Okay? Are you the leader of your family? Are you saying, hey, I have the answers. You can rely on me. Well, that's what I do for my family. I tell them, say, hey, I have the answers. You want to listen? Fine. I'll help you out. Now, don't get me wrong. I have 12 brothers and sisters. I had 13, but one of them passed. The youngest is not supposed to go first. Sorry. The youngest is not supposed to go first. The parents are supposed to go first. Okay, then the sequence is whatever it is. But the parents aren't supposed to bury the kids. My younger brother, he was the first one to go. He was the youngest. Anyway, besides the point. So, yeah, I took responsibility on myself. I will find the answers. If my brothers and sisters, aunts, uncles, nieces, nephews, if they want to know the answers about money, where to put money, they can ask me. I took that responsibility on myself. Why? I was brought up poor, dirt-ass poor. You want to know what poor is? Yeah, we were poor. Okay? We were on welfare in the 60s and 70s. I didn't know how poor I was until my fellow students told me. James, weren't you wearing those the other day? Yeah, that's all I have. I had 3 pair of pants in school. 3. Okay? We had school clothes and we had play clothes. All right? We came home, very first thing we did is we changed out of our school clothes and jumped into our play clothes. Well, that's what poor kids do. Rich kids don't. They just, wear the same clothes. They ruin them, fine. Parents go and buy them out. Sorry, it wasn't in the cards for us. Anyway, how my mother did it is beyond me. I mean, I took a look at her book. She's got a little book. She write down all her bills. I was like, how the hell can you live on $65 a week? 5 kids. $65 a week. This was back in the 60s. Yeah, well, she managed. Anyway, besides the point. Do you like international paper? That's it. Do you like it? Does it make sense? Well, there's 10,340 different companies to choose from. Take your pick. You can invest in anything you want. Really, it's not going to affect me any way whatsoever. Okay? I'm just sharing what I do. That's it. I'm creating a video, diary for my children and my grandchildren. Because I'm not delusional. I know for a fact I'm not going to be here. I also know for a fact in 10 or 15 years, I'm probably not going to remember everything that I know now. So that's the video diary. So that's what I'm doing for my kids and my grandkids. Because eventually when I'm gone, I'll say, when I'm older, I'll say, well, watch the videos from, 2018. Well, that will tell you about this. Watch the videos from here. Because I'm giving everything to my kids and my children, my grandchildren here in these videos. So when I'm gone, they will have it. I mean, think about it. We can watch The Little Rascals. They filmed that in black and white back in the 20s and 30s, over 100 years ago. And it's still there. So their children, their grandchildren, their great-grandchildren can watch it. Well, great, that's what I'm doing for my children, my grandchildren. But I'm doing something with it, hopefully, actually help them out financially. Because think about it. Some of the companies that I'm looking at are over 100 years old. Consolidated Edison, that's over 200 years old. Well, that's going to be here long after I'm gone. And if my children want to know, hey, what's a good company that's been around for a long time? Wait a minute, didn't Grandpa say Consolidated Edison? There you go. I'm giving information for my kids and my grandkids. You guys just have the opportunity to watch what I'm doing and then ask yourself, does that make sense? Can I do that? They're good, valid questions. Now, I'm not trying to sell anything. The whole night long, every single video, you won't hear me saying, hey, I got this, you got to buy it. No, you won't hear me say that. We're all adults. We know how it works. Yeah, I've written 14 books. Yeah, I get the home study course. Yeah, blah, blah, blah. I'm not trying to sell you anything. I'm just sharing information. Hopefully passing along information for my kids. Hi guys, how you doing? Hopefully, when I am gone, it will be valuable to them. Okay, 10x charting? Yeah, plus compounding. Ooh, I love compounding. I do. Ooh, as a matter of fact, let me show you something. This, you're going to love this. La, 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 la. Right there. Now, you probably heard of something like this, but you probably never seen it. This is what is called a weekly compound interest calculator, specifically designed for me because I wanted to know how, a penny here, a penny there, a dollar here, a dollar there would affect my investing long term. So let me give you the math really quick. You start out with a certain amount of money, okay? Every week you commit to deposit a certain amount of money. So the math would be X, which is the amount you start with, plus Y, whatever your weekly commitment's going to be, multiplied by 0.01, which would be 1% interest. And that gives you your answer. Then you do it again, 52 times to make 1 year. So the compound interest is X plus Y multiply 0.01 plus Y multiply 0.01 plus Y multiply 0.01, 52 times just to make 1 year. That gives you the idea of how much 1 penny can change everything. Well, let's find out. Let's do it with $1, okay? Now, let's start out with $1,000. We'll just put $1,000 right here. See, initial deposit, $1,000. Periodic deposit. So here's where I make the commitment to myself. Well, let's say I'm going to do $5 a week. $5. Come on. We're all adults here. $5 a week ain't that much. So start out with 1,000. We're going to put in $5. Just $5. And then we're going to look at the percentage. 1%, because that's what I'm teaching. I'm teaching 1% per week. So initial deposit, $1,000. Every single week, $5. Interest rate, 1%. Frequency, weekly. Okay. Time frame, 1 year. Well, let's take a look at the yearly. After 1 year, what do we come up with? Okay. We're going to compute our savings right here. 1 year, it's going to look kind of like this. $2,016.53. Wait a minute, didn't I start out with 1,000 and I only deposit $5 a week? So $5 a week for 1 year, I doubled my money. Now I'm at 2,000. That's just 1 year. What would it look like in 10 years? Can you imagine doing that for 10 years? Put a zero there, 10 years. Okay? 10 years, starting out with $1, put in $5 a week. 10 years, you're going to have 264,000. Okay? Do you realize that 264,000, 1% every week is $2,600? That's $2,600 a week in interest. Well, that's crazy because I'm only putting in $5. 10 years, it ballooned. See, I've only put in $3,600. Okay? That's total amount invested, $3,600. Total interest earned, $260,000 in interest only. Well, that's the beauty of compound interest. Okay? So what if, just what if, from $5, I do $6? Just $1. What does $1 difference make in a 10-year period? Okay? So 10 years, $5, it's 260. So 10 years at $6, just $1 difference, 280,000. $1 difference in 10 years makes a difference of 280,000. That's a compound interest calculator. It tells you. So how much money do you need to invest to get your target? And once you get your target, what kind of rate of return can you expect? Well, at 1%, this is what gives me. Okay, let's say I have 100 grand. Okay, that's 100 grand. And then I put in $60 a week, 10 years. That's a freaking crazy number. Look at that, 18 million. All depends on what you're starting on. What are you starting out with? What is your commitment? How consistently are you willing to commit to put even the smallest amount? Because see here, we're looking at $60 a week. That's not a whole heck of a lot, but we're all different. We all have different goals. We all have different dreams. We all have different outcomes. We all might want to retire at a different time in life. I didn't want to keep on working to 65, 70, whatever. What are they talking nowadays? 72 for retirement? Oh, hell no. I'm 61. I'm perfectly happy doing nothing. No, don't get me wrong. I've been working since 1973. My very first job, Old Man Simmons' farm, 1973. I was in 4th grade. I was still in elementary school when I had my first job. I got up in the morning, went to school, didn't even come home. I went right from the school bus to the back of the pickup truck with Old Man Simmons, me and Bruce. We would head out to the farm, and we'd head out to the woods, and we'd chop firewood all day long, load up the truck, and then we would deliver it, and then we'd have to stack it. Can you imagine that? A pair of 4th graders. I was in 4th grade, he was in 5th grade. Okay, both in elementary school, both in the back of the truck, on top of the big, huge stack of wood. Then we'd unload the wood, and then we'd have to stack it at the people's houses. And we got a whopping $5 for the day. Hey, it is what it is. All right, let's get out of there. So that's a weekly compound interest calculator. Go play with it. See what the numbers look like. What you're looking for is consistency. That's it. How much are you willing to put into your little basket for your retirement? Because guess what? It's coming, whether you like it or not, whether you agree with it or not, whether you're happy about it or not. Totally irrelevant. Time does not care about your feelings. It don't. Tick tock, tick tock, tick tock, tick tock. It doesn't stop. It's relentless. Okay? And the older you get, the louder that tick tock gets. Anyway, let's keep progressing forward. What do we want to look at now? Johnny, tell him what he's won. Well, Bill, here we go. All right, let's get out of here. Let's get out of here. Let's get out of there. Let's get back to here, and let's look at what else. What else do we have to look at? Most 401k people don't make any moves. No, most people don't. Lap man. Oh, I missed a whole bunch of these questions. Missed a whole bunch of these questions. All right, SYY. Oh, that's Cisco. Uh-oh. Oh, wow, I missed quite a bit of questions, didn't I? Okay, APLD, we did that one. We did that one. YO clip. APLD, we looked at that one. What are you risking? Well, it depends on how you look at it. Now, isn't that a weird question? It depends on how you look at it. What's the risk? Well, there's risk in doing absolutely nothing. You do absolutely nothing, nothing ventured, nothing gained. Well, there you go. Okay, what's the risk? Well, if I'm putting my money into international paper, well, I'm risking my money in a company that is under someone else's control. So ask yourself the question, do I like international paper? Do I like UPS? Do I like FedEx? You got to put your money somewhere. If you put your money into the bank, what are they giving you? Maybe 1% for the year, maybe. If you put it into a CD, what are they giving you? 3-4% for the year, maybe. Everything has risk no matter which way you look at it. There's a risk of doing something. There's a risk of doing nothing. Because trust me, life, everything has risk. Everything. There's not a single thing on this planet that doesn't have some risk to it. It all depends on how you look at it. Schmidt-Seta. Oh, Schmitta. Schmitta? Schmitta-Seta. Can you explain options? Oh, yeah. An option. You have a call option, you have a put option. Well, each one has a different characteristic and has different rules to it. I like call options. Don't ask me about put options. I only give away one thing. That's what we're doing now. Covered calls on dividend stocks for a safe, predictable, consistent 1% per week. That's over 50% per year. If you're okay with that, great. If you're not okay with it, I can't help you out with it. But here's my idea of an option. An option gives you choices. That's it. It gives you options. It gives you choices. So in the stock market, the way it works is if I buy something, if I own something, I can sell somebody the right, not the obligation, to buy it from me at a certain price by a certain date. Let me see if I can explain it this way. Let's say, hypothetically speaking, I have a product, a cup. I'm going to sell it to you for 10 bucks. You give me $1, I will hold it for you until Friday. When Friday comes, you either give me the $10 for the cup, or you say, no, thank you. I get to keep that dollar. It's a non-refundable place setter. Okay, hey, can you hold my line? It's like when you cut in line, say, hey, you mind if I cut in line? Well, yeah, give me $1, I'll let you cut in line. Same thing. So let's say, hypothetically speaking, you give me $1 for the cup. You have the right to buy this from me at 10 bucks. By this Friday. After this Friday, you no longer can buy this from me at from 10 bucks. Let's say you don't show up. Well, great. I'll do the exact same thing to Peter next week. Peter, you want it for 10 bucks? Great. Give me $1. I'll hold it to you until Friday. Friday comes along, you either give me the 10 bucks or I get the right to sell it to someone else the following Monday. The following Monday, I sell it to Tracy. So I just collected $1 for one person, another person for the exact same product. Same thing with stocks. If I buy international paper, 47 bucks, I can sell it to someone else for $47.50, collect $45 per contract. Same thing, right? I buy a product, I own it, I can do what I want. The option gives somebody else the right to buy it at a certain price by a certain date. So when Friday comes, whoever paid this right here, they have the choice. Do I want to buy it at $47.50? Or do I say, nah, you keep the money, I'll go to something else? Because one thing that's missing, we have no idea what the value or the price is going to be when Friday comes. So what if, here's where we are now, what if Friday comes and the stock is up to here? Are you going to buy it at $47.50 if the stock's at 53? Yeah, more than likely you will. But what if it went the other way? What if it went down? Are you going to buy it at $47.50 if the stock is only 45? No, you won't. So you let that $45 go, $45 per contract. The risk is, well, for me, the risk, some people call it risk, I don't call it risk. My risk here is if I buy it at this price, I sell it at this price. My risk is, what if the stock jumps up? I miss out on all that. Listen closely. You ready? I don't care. Honestly, I honestly don't care if the stock does this. I don't. That's not what I'm looking for. I'm looking for this. I'm looking for this every single week on every single stock I own. Every single stock I own or I control has a weekly option against it. Because I don't care what happens. I want some money coming in every single week. If the stock drops, don't care. I will drop my strike price and I'll get a lower premium. I want something coming in. Something. Something is better than nothing. Now, most people who don't know this information here, they buy a stock and they just hold on to it for years. And they collect a dividend every 90 days. Fine. Not wrong with that at all. I applaud those people. Good for you. Me, I buy a stock, I collect a weekly premium, and every once in a while, I'll collect a dividend. Now, I could care less about the dividend, but hey, it's free money, thank you. It's not my objective. My objective is a simple, safe, predictable, consistent 1% per week. That's my objective. How do I get it? Appreciation, don't care. Premium, don't care. There's another one. There's like 3 different ways. Dividend, premium, appreciation. 3 different ways. Really don't care which one it is. My goal, 1% every week. Let's move on. All right, so that's international paper. Hope that worked for you. Hopefully that explanation was good. Third Patriot, Eddie Millie. What's happening, Eddie? Drezik, what's happening, Drezik? What time frame are you looking at on your charts if you're doing weekly options? That's kind of a good question, Third Patriot. I'm looking at day. Monday, Tuesday, Wednesday, Thursday, Friday. Monday, Tuesday, Wednesday, Thursday, Friday. I don't know about you, but I live my life one day at a time. So, what did it do Monday? Well, this is what it did Monday. What did it do Tuesday? This is what it did Tuesday. Look, it went up. That's it. I don't sit in front of my computer all day, 5 or 10 minutes. People think that's weird. You're probably on your computer all day. No, I'm not. Okay, I turn my computer on. What did it do yesterday? What did it open at today? What does it look like it's going to do? Okay, great, turn it off. That's it. I have other things to do. I personally would prefer to go outside and watch the grass grow than sit in front of the computer watching this crap. I'm past the point where money is a major motivator. I'm past that point. And you, believe it or not, you will get there eventually. Because you will. Because at some point in life, money is no longer the driving factor. Okay, at this point now, most of you do have money as a driving factor. There's nothing wrong with it. It's just the stage of life in which you're at. I'm retired, so I'm not punching a time clock. I'm not looking for the next vacation coming up. My life is a perpetual vacation. Okay, my life is dependent on my children and grandchildren nowadays. So what are the kids doing? All right, can we get together and have some fun? Well, I got to plan around their lives because they're working. They're putting in their 30, 40 years. Well, let's see what happens. Tea with honey. Good for I'm not used to talking so much. Kind of weird because I talk all night long for 2 or 3 hours every single night. But if you're not used to talking so much, it bothers your vocal cords. I never get sick of listening to you teach a strategy. 110 Beast, how are you today? All right, let's keep on going. What do we have over here? I learned something new from this strategy every time I use it. All right, well, that's good. I'm going to take that as a compliment. La 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 la. Jasper wants to take a look at UNH. Hey, where are we? Wow, I missed quite a bit of questions over here. Here we go, right here. Okay. Sen K, Dividend Stock Talk on Patreon. That's you, right? Absolutely. Sen K, you know what I always tell people, before you sign up, drop me your number. I'll give you a buzz. We'll have a chat. It's not for everybody. It's slow, it's boring, it's monotonous, it's repetitive, and it only gets 1% a week. But guess what? It gets 1% a week. Every week, after week, and it's less than 5 or 10 minutes a day. So if that makes sense, if that sounds good, why not? Think about it. 5 or 10 minutes a day, 1% a week, that's 50% per year. So whatever you're starting out with, think about it. If you got 50 grand, 50% is 25,000, or 50% is $500. So 1 hour of your time is worth $500 an hour. If you got 20 grand, sorry, your time is only worth $200 an hour. How much money can you generate safely on a weekly basis? How much time? Well, at first, it's going to be a little cumbersome. It's going to be a little clunky because you're not used to the terminology. You're not used to the ifs, ands, and buts. But it all works out in the end because eventually you'll be able to take a look and you'll be able to see it. 3 to 4 seconds. You ready? High, low, where was it? Where is it? Up, down, up, down, up. It's not that difficult. It was created for a 9-year-old. In 2008, my 9-year-old daughter says, "Daddy, what are you doing?" Not, "Daddy, can we go to the store and buy me a new tutu?" Or, "Daddy, can we go get a pony?" "Daddy, can we go get a chinchilla or a rabbit or a raccoon or some kind of rodent?" No, "Daddy, can you teach me?" Well, most adults don't get it. Most adults don't understand it. But here's a 9-year-old girl who wants to learn how to invest in the stock market. What the hell's the matter with her? Think about it. What little girl wants to learn how to invest stocks at 9 years old? I didn't care. She's my daughter. So yeah, I wanted to spend time with her. Now, when she was little, believe it or not, okay, I owned my own manufacturing company. So I would stay home with the kids during the day. And the wife would go to work and she would do most of the work. She would keep an eye on all the employees and she would run the business during the day. Okay. Then she would come home and I would go to work and I had the whole place to myself from about 8 o'clock at night until I was done. Now, if any of you are the artistic type, you know there's no such thing as a time clock when you're an artist. You get started and you get in the flow and you just keep working until you pass out, until you're done. I've done many nights I've done that. As a matter of fact, I had a couch at my shop. And when I got tired, I just went into the other room. I just lay down, get a quick nap, and then I'd start over again. And I would work until I was done. Some nights it will be 2 or 3 hours. Some night it will be 10 and 12 hours. With artist types, you just don't know because we're weird. There you go. I admit it. I'm weird. I'm not the same. So anyway, yeah, there you have it. So my 9-year-old, when she was little, I made her dresses. Believe it or not, I did. I made her dresses. We played dress up. She let me cut her hair. I cut her hair once a week. We come up with a new style. We came up with some really cool stuff. And I made her this for Halloween. I made her this wedding dress. Okay, she was like 4 years old. I made her a wedding dress with a I think it was like a 4 or 5 foot long train. And as she's walking, the air goes under her dress and it all billowed out. It looked really super cool. Anyway, besides the point, is what it is. That was the past. At 9 years old, a little girl wanted to learn how to trade stocks. And I just wanted to spend time with her. So we did for a few years. We played, well, we traded stocks. Anyway, I came from the 10MinuteTrader.com. Is that the right place to buy? Well, if you go to 10MinuteTrader.com, as soon as you land on that page, there's a big, huge black thing that says live trading. And you just press on that, and that'll take you to where you sign up. Okay, this guy is a quant trader. Usually, I have no idea what a quant trader is. Isn't that weird? Jerry, how do you track your trades? Do you use a spreadsheet? No, I am a lazy trader. Really, I am. I take a look at what my positions are on Monday. Okay, if I have $100,000 on Monday, by Friday I want to bring in at least $1,000. If I have $200,000 in my account, on Friday I want to bring in at least $2,000. That's it. Simple. If I have $100,000, I want to bring in 1%. Whatever 1% of whatever I have. So whatever trades I'm making, did I make my 1% this week? Well, this week I did. Last week I did. Norman, how are you doing? Are the Greeks still the same for covered calls? The Greeks are never going to change. But here's the thing. I don't look at the Greeks when I'm trading. It's a simple yes, no. Is it going up? Yes. Is it going down? Yes. Is it going up? Yes. Down, up. So up, down, up. It's going up. I do not need the Greeks to confirm what a 5-year-old can see. Here's the bottom. It's going up. I don't need the Greeks to tell me that. If I'm buying it at 47.32, 1% of 47.32 is 47. So 47 is paying 85 cents. Well, that's almost 2%. I don't need the Greeks for that. It's simple math. 1% of 47 is 47. Think about it. 1% of $47 is 47 cents. Okay? Take decimal point, move it over 2 places. 0.47. Okay? So if I'm looking for 1%, I'm looking for 47 cents. That's it. 47 cents. It sounds so minuscule, so petty. But 1% every week comes to 50% per year. And if I have 100,000 in my account, that's $1,000 a week or $1,000 an hour for my time. Well, that works for me. So it's all going to be a numbers game. So I hope that makes sense. Okay, I don't pay attention to the Greeks. Okay, trying to teach a 9-year-old theta decay or delta, or what the effect delta has on a descending. Yeah, no, sorry. Try explaining that to a 9-year-old. Okay, now she wasn't a Mensa student. She was just a regular, average, ordinary, everyday little girl. Right? You can line them all up. You'll have one that's extraordinary, one that's, not so much, and then you have everyone else that is normal. That's what she was. Normal, everyday little girl. All right, anyway, that's what it was created for. Do you like Dragon Ball? My kids like Dragon Ball. I'm a little bit old for that. Good evening. Is the couch still available? Yes, it is, believe it or not, but I haven't slept on the couch in a long time. All right, where are you going? Florida, Georgia, cross country. How are you today? Big Dino. Woohoo. 2020 cash was for many a major setback. Oh, crash. Okay. For us, it was only a great opportunity. Yeah, for some people it was. Did you lose your head on a pullback? A lot of people do. A lot of people panic. Every time something happens, somebody's going to say, oh, the world's going to end. Let me get my money. Yeah, what are you going to do with the money if the world's going to end? Think about it. If the world's going to end, all your money ain't going to do squat. Sorry. What time frame are you looking at? We already did that question. APLD, we already did that one. ECO, what the heck is ECO? Okay, user 6832, ECO, who the hell are they? ECO, ECO, what the hell? No options. No. Sorry, no options. Eddie, what's happening, Eddie? Mama, what's going on? Mama, don't let your babies go up to be cowboys. Eddie Millie, you got 15,000 you want to start? Here's my advice, Eddie. Do not put any money in the stock market until you played Monopoly. Sounds a little weird. Let me explain. Monopoly is basically to get people set up for buying real estate. 4 greenhouses, 1 red hotel. You go around, you collect rents. You don't collect, you collect your $200. You don't get sent to jail, blah, blah, blah. All that kind of nice, neat, fun stuff. Stock market, same thing. You can have, well, let's see if we have this right here. There we go. Look, 1, 2, 3, 4. 4 accounts down here. This one here is a paper trading account, which means there's no value to it whatsoever other than learning certain strategies. If you come up here, 1, 2, 3, 4, 5, 6. 6 different accounts here, 4 different accounts down here. There's only one paper trading account. Well, I've been trading for over close to 30 years. I still paper trade because I come up with ideas all the time and I want to test them in real time. Not real money, but in real time. Because a paper trading account almost looks the exact same as a real account. That's a paper trading account. That's a real account. They look exactly similar, except for the lettering is in orange rather than green. Okay, so practice, Eddie. Come back every night. It's free information. Ask as many questions as you possibly can. You get stumped? Fine, ask a question. Matthew 24. Ask and you shall receive. Seek and you shall find. Knock and it shall be opened unto you. Blah, blah, blah. If you're interested in it, just do it. Get a paper trading account first. Learn the basics. Find your way around the platform. Hit a bunch of buttons. Do a lot of wrong crap. Do some really stupid stuff in your paper trading account. Learn from your mistakes before you put real money at risk. Hopefully that helps you. Kevin, I've been buying Intel. What are your thoughts about this stock? Ooh, Kevin, I actually own some Intel. Believe it or not, I do. INTC. Here we go. Check this out. Intel. High, low. Where was it? Where is it? Look at the motion. Down, up, down, up, down, up, down, up. That's the motion. That's for the whole year. What do you think is happening next? Well, for me, Kevin, I'm going to pause off from buying. And I already bought some. So this here, here's your bottom here. Look at this shoot up right here. I would wait. Me personally, I would wait until profit take it. Let me get a little bit closer. You ready? Take a look at this. Here's your last 30 days. 30 days, we're right here at 23. We drop all the way down to 19. Then from 19, we shoot all the way up to almost 27. Think about it. From 19 to 27. That's $8. $8 on a $19 stock is pretty damn close to a 50% increase. 50% increase from here to here. What do you think? Seriously, what do you think, Kevin? Do you think people are going to start saying, yeah, hey, 50%, I'm going to start taking my profits? Well, that's what I would do. Because I'm into it somewhere around here. She jumped up, yeah. At some point, when you're doing covered calls, at some point, it doesn't make sense to hold it anymore. Because if I bought here, the premiums up here do not pay 1% because you're too far away. So take the profit. When profit taking starts and it's back down here again, jump back in. Okay, you shouldn't be looking at just one company. You should have a roster. Okay, so hey, this week Intel looks great. Look at this run up. Great, take your profit and jump into something else next week. And then when this comes back down to a more reasonable price, then jump in. Mama, how you doing? Kate, Creighton, Barrett, Plains All-American, PAA, Plains All-American. I'm going to say no. Only because, you ready for this, Creighton? Take a look. High, low, where was it? Where is it? Look at this. Down, up, down, up, down. It's definitely in a downward turn at this moment in time. But you know what's great about going down? Eventually, it's going to find the bottom. If you look, here's your top, here's your bottom right here. So once you find the bottom, okay, let's back up for a second. Right there, see that? See, she went up, she came down. Here's the bottom here. How do you know? Because 1 day to the upside, 2 days to the upside, 3 days to the upside. That's where I want to jump in right there. 2 days to the upside. On the third day, I want to jump in, then take the ride. Okay, at this moment in time, okay, this moment in time, we're searching for the bottom. So I'm going to write Plains All-American down for this week and next week. So as soon as this finds the bottom, turns around, goes back up, then yeah, I'll jump into it. But what does it look like? Well, the 1750, yeah, hell no. Okay, next week, 1750 is going for 20 cents. That's more than 1%. That's what I'm looking for. However, I want the bottom first. Okay, this might be the bottom. We don't know because we need something to compare it to, which means tomorrow, what's tomorrow going to look like? Tomorrow's a 50-50 shot. I don't care what you say. I don't care who you are. It's a 50-50 shot. It's either going to be higher or it's going to be lower than that point. That's it. There are no other choices. Well, it could be the exact same. Okay, so 3. It could be higher, it could be lower, or it could be the exact same. Could be. But we won't know until tomorrow. And then I want 2 days to the upside, and I will jump in on the third day. So yeah, Plains All-American, that is on my list for next week. Alrighty then. Next, will you look at D-Nut? Krispy Kreme, really, Bishop? D-N-U-T. Krispy Kreme. Oh, check that out. Bottom, now she's heading up. Nice, I like that. Here's your top, here's your bottom. Okay. High, a low. Where was it? Where is it? Look at this. Sideways, down, up, down, up. So it's definitely in an upward trend. $3.61. I'm going to say no to this. Now, my reasoning for saying no to this, you ready? 0, 0, 0. Okay, $4 is going for 5 cents. 0, 0. The premiums don't look that good. Sorry. Okay, you got me all excited with this right here. It's in an upward trend. Great. If I buy it at 361, I'm going to sell the 4s. And the 4s for this week are getting 0. Why the hell would I do that? Next week's 4s going for 5 cents. Just barely 1%. Okay, maybe. But if I'm wrong, the very next one out is 0. I don't like the premium. Okay, I like the premium on Dell. Take a look at this. Okay, $2, 148, 126, 93. Each and every single one of these is nice fat premium. 1 strikeout, 2 strikes out, 4 strikes out, still a nice premium. DNUT, 1 strikeout, you're getting 0. Yeah, no thanks. Sorry. Kid Hundo, Cisco, SYY, and Cisco. Cisco, SY. Now there's 2 different Ciscos. There's CSCO, which is a yes. SYY, Cisco, is a no. I don't do monthlies. 19 September, October, November, January, February, March. Yeah. I don't do monthlies. The numbers just don't work. Sorry. Axel, one of the stocks I have had a lot of good luck with is OXSQ. What the hell is that, Axel? Okay, let's take a look. OXSQ. OSXQ. OSXQ. I spelt it right. OXSQ. Okay. We cannot find this symbol. That means in the U.S. stock market it doesn't exist. Sorry. UPS calls 88 for this Friday. Mustang, how are you doing? Mustang 71. Now I'm kind of curious. Do you really have a 1970 Mustang one? I don't know. Do you? Stephen William, good evening. Rude boy. Terrible, okay. Joe Berman, good evening there, Mr. Joe. How are you today? Back again. You will notice for those people who come over and over and over again, there are some people that come all the time. Okay, Joe's one of them. Okay, Joe wants to take a look at Southwest Airlines, LUV. How the hell do you get Southwest Airlines out of LUV? All right, here we go. The high and the low, where was it? Where is it? Up, down, up, down, up. Definitely in an upward trend. Cool. 31.59, 31.59, 31.59. What do you think? 31.59? Is that it? 31.59? What's the closest strike price to 31.59? 31.50. 31.50. 49 cents for 3 days. Hell yeah. Next week, 31.50, 76 cents. That's 2%. Yeah, why the hell not? Think about it. If I get a safe, predictable, consistent 1% every single week, that's a 50% return. That means I only have to work an hour a day for the rest of my life. No Saturdays, no Sundays. Just an hour a day, maintaining my money. That's it. What makes sense? What doesn't make sense? Where is it going this week? What's happening this week? Never buy something you don't want to hold on to long term. Never sell at a loss. Oh, did I tell you the 5 rules? 5 criteria. You ready? Simple, safe, predictable, consistent, no way to lose. That's 5 criteria for my 9-year-old daughter. So for a 9-year-old, you got to give them rules. So the rules for my 9-year-old, simple. Number 1, never buy something you have no intention on holding on to for the rest of your life. If you don't like it enough to say, you know what, I'm going to buy it and never, ever, ever sell. If you don't understand it, don't buy it. Rule number 2, never, ever sell at a loss. It defeats the purpose of the game. And yes, it is a game. Sorry. Rule number 3, make sure the company is consistently profitable. Now, this one always boggles my mind. Always, always, always. Because you would think, hold that thought. Rule number 3. You would think never buy something that is not consistently profitable. Never invest in a company that's not profitable. You would think that is logic. That is a sound idea. But trust me, I've been doing this long enough to know some of the crap that you people invest in boggles my mind. Seriously, it does. I think to myself, does this person even look at the data? Even look and see if this company is profitable? Why the hell would you invest your money in a company that's not profitable? It sounds so elementary. It sounds like, why the hell would you invest your money into a company that's not profitable? It sounds logical, but you would be flabbergasted by how many people ask me to look at pieces of crap, in my humble opinion. Sorry. I don't mean to offend anyone if you work at one of these companies. I don't mean to offend you at all. Okay, I'm looking at it as an investment opportunity. Is the company consistently profitable? Now, the lady answering the phone, or the man answering the phone, the lady or the gentleman sweeping the floors, the lady or the gentleman cleaning the windows, doing all the mundane stuff, I don't blame them at all. They're just doing their jobs. It is the higher ups. It is the executives. They are the ones who make the decisions. They're the ones that are, it's the captain of the ship, the pilot of the plane, the person leading the charge. Whoever is in charge of the company, is the company consistently profitable or not? Well, if it's not profitable, why the hell would you put your money into it? Boggles my mind. Some of the stuff we look at, I'm thinking, what the hell is this person thinking? Anyway, let's keep on moving forward. So LUV, definitely an upward turn. 3150 to 3150 right there. Let's take a look at that one after we take a look at the whole chart. Because the whole chart gives me an idea. Okay, the 1 year chart just gives you an idea. Is it worthy of me going to the next step? Well, first step is accumulating your list of stocks. That's your first step. Your second step is putting your list of stocks in an EX dividend calendar. Well, the reason for that is to tell you when the company is going to pay their dividend. Well, now why is that important? Hold on, let's break off for a second. Let's get out of here. Okay. Each one of these little tiny green dots, every single one represents a company that is paying a dividend. Remember, there's 10,340 different companies. So out of those 10,000 different companies, only about half actually pay dividends, which means only about half share their profits. So if I wanted to collect the profits on Katie, look at his Katie right here. I have no idea who the hell Katie is. C-A-T-Y. So if I wanted to collect this dividend here on the 28th, I got to buy the stock the 27th, 26th, 25th, 20th, there, any day before this date. This is called the EX date, EX dividend date. Let me explain. 4 dates to remember. Date number 1 is the announcement date. Hey everyone, my name is James. This is Dividend Stock Talk. This is how much money we made. This is how you're going to get yours. And this is when you're going to get it. It's the announcement date. They tell you how much money they make, when you're going to get your share. It's the announcement. They're announcing it. They're announcing, hey, this is what we made. It's the announcement date. Date number 1. Date number 2. EX dividend date is represented by the little green dots. Each one of these little green dots represent the company that has been profitable and is going to share their profits. Simple, right? EX dividend date. Last day the stock trades before they pay their dividend. If you want to catch the dividend, you're going to buy it before the little green dot. Date number 3. Date of record. Whoever owns the stock on the date of a record is entitled to the dividend. Date number 4. This is the easiest one. The payment date, when you get your money. 4 dates. Announcement date, EX date, date of record, and payment date. That's if you're interested in dividends. Why am I interested in dividends? Because a dividend just before the stock pays its dividend, 28th, the stock will increase in value. Not all of them, not 100% of the time, but most of the time. Most of the time, a stock will increase in value just before the EX date. So by knowing that ahead of time, knowing when a stock usually moves, well, that gives me a little bit of information where I can have the odds and probabilities in my favor. So if the odds and probabilities are in my favor, well, most likely I'm going to be right, and most likely I'm going to win, and most likely I'm going to be happy getting 1% every week. Well, that works for me. So, step 1, come up with a list. What stocks do I like? Step 2, put them in the calendar. Because the calendar is going to tell you when to buy it. Or, should I say, when to look at it. Because I have no intention whatsoever. What's today's date? 19th. Right here. Target paid a dividend last week. Consolidated Edison paid a dividend last week. Clorox last week. MTG 2 weeks ago. FE 2 weeks ago. Okay. MetLife 2 weeks ago. I honestly don't care about those stocks at this moment because they already paid their dividend. After a dividend, the stock has a tendency to go down. So before the dividend, stock goes up. After dividend, stocks go down. Usually. Not always, but usually. So knowing that information, I only want to look at these stocks this week. Next week, I only want to look at these stocks. And then the next week, so on and so forth. I cannot buy every single one of them. I can't. Let's change this list for a second. Let's change it. All right. See these right here? Each one of these companies have increased their dividends. That means increased their profits for a quarter of a century. That's 25 years. So for me, every single one of these is on my list. Every single one is a contender for me because they have been consistently profitable every single year for at least 25 years. So yeah, they're a contender for me. It means I will take a look at them. But Nextera on the 28th, well, yeah, I'll look at it this week because this week we're here. Next week, Nextera. I have no desire whatsoever to look at Target because that was last week. Exxon Mobile, that was last week. Walmart, that was last week. IBM, that was 2 weeks ago. Fast Terminal, that was 3 weeks ago. No desire to look at that now because that opportunity came and went. Well, what do we have this week? Well, this week, 3M, Johnson & Johnson, Spaghetti, Dover, Nextera. Next week, McDonald's, Stanley Black & Decker, Ben Franklin, Lennar, Kimberly-Clark, Pepsi. Okay, those are the first week of September. Did you hear that? First week of September. That's 2 weeks away. We are almost in September, which, by the way, if you didn't know, well, you did know, but let me remind you, September is the third month of the third quarter, which means the end of September, we are 3/4 away of the first year. And guess what? For those you diehards, no, Trump's president and the world didn't end. And we're in almost the end of August and the world didn't end. Imagine that. All right, anyway, so what do we have next? Oh, yeah, so those are the rules. Step number 1, come up with a list. Step number 2, put them in a calendar. Step number 3, take a look at the charts. Okay, here we are. Take a look at the charts. What's the chart telling me? Great, here's the number here. What does it look like? Great. Now, step 4. Look at the chart. That works? Great. What's the numbers? Numbers work? Great. Now, I'm at that point where I want to look a little deeper. I want to see the actual numbers. All right, that's why I need the glasses. Glasses, here we go. A year ago today, Southwest Airlines was at 26.60. Shoots up, pulls back, shoots up, pulls back, finds the bottom right here. Remember I told you that? Almost every single stock is going to have this. Second week of April, TDS day. It's where everybody panicked and everything dropped. Well, here's the bottom in April, 90 days ago. Shoots up, pulls back, shoots up, pulls back. There you go. Up, down, up, down, up. Where do you think it's going now? I don't care what you say. I don't care how you read. I don't care a lot of things. Seriously, I don't. It is, I love facts. I really do. That's the high. Bitch, moan, complain all you want. You can't hide the fact that that is the high right there. What I'm looking at the moment, this is the low right here. Okay, I can get my 5-year-old grandson. Hey, buddy, where's it going? Oh, Papa G, it went up. It came down. Now it's going up again. It's created for a 9-year-old. Simple. That you can't get any simpler than that. Bottom, top, drop, up. That's it. It's in an upward trend. Great. What's the last 30 days? Here's the last 30 days right here. Gives me a good idea of where it's going next. Think about it. Where is it going next? The high? Here. The low? Here. Okay, up, down, up. No? Nobody wants to argue on that one? Okay, well, here's the bottom here. Now she's shooting up, 31.59, 31.50 right there. That's what it's paying. Let's see what it looks like. So let's get rid of this. Let's change this to covered call, 31.50 right there. And one contract. This way it gives you an idea of how many can you afford. Okay, and there it is. Buy one covered call, LUV 100. That's the weekly. Okay, 22 August. That's this coming Friday, 3 days away. 31.50 at the market to open. 41.50 is the profit. 3,100 is the investment. Think of it this way. Okay, if you don't want to think about buying a stock, buying into a company, think of it as an investment in a weekly producing cash asset. Well, think of it as a vending machine. You buy a vending machine, it's going to cost you a certain amount, $3,100. Okay, this one is giving me $40 this week. Okay, next week I'll move it somewhere else. It'll give me what, 30, 40 bucks next week? And maybe it'll give me 30, 40 bucks the week after. Maybe 30, 40 bucks the week after that, so on and so forth. Every week I can get like 30, 40 bucks. Every single week. After week, after week, after week, after week. Because LUV, Southwest Airlines, pays on a weekly basis. Every single week it has an option. Every single week I can get some type of cash flow. So if I'm paying $3,100 for this little vending machine, well, this week it's giving me $41.50. What's the calculator telling me? So I can't figure that on top of my head. $41.50. That's the maximum profit right here. Maximum profit. Cost of trade, including commissions and fees, $31.09. Okay, so let's divide it. $31.09. $31.09. Grand total of 1.33. So we've looked at like 6 stocks tonight. 1.1, 1.2, 1.3, 2 point whatever. Every single stock we looked at so far has over a 1% return for 1 week. So the big question that should be in your head is, does it make sense? Do I like this company? That's the big one. Because you have 2 choices and only 2. Do I do this myself? Or do I give up accountability and let someone else do it? Because I watch a lot of videos. I listen to a lot of people because I want to know what's going out there. And at this moment in time, they have what's called the 4% draw. Do you know what the 4% draw is? Whatever amount of money you have, if you've got $1 million, well, most advisors will say, hey, you can pull up 4%. Well, 4% of $1 million is only 40,000. Think about it. 4% draw of $1 million is 40,000. Can you live comfortably on 40,000? Well, here's another thought. 1% a week, 40,000, that's 80,000 bucks. Hold on a second. I could get 40,000, 1% a week, starting out with 80. 1% a week is 40,000. But if you give your money to a money manager and you give them $1 million, you're getting 4%, 40,000. So the question I have rattling around in my head, is it easier to get $80,000, invest yourself 1% a week, that's 40,000, or is it easier to get $1 million and give that to a financial advisor who gives you 4% a year, which is 40,000? Think about it. An hour a day, I only have to come out 80 grand. I can live 40 grand, no problem. Think about it. It's a numbers game. Anyway, next. Let's get out of there. Let's get out of there. Let's get out of here. And here we go. Tra-la-la. There we are. All righty, though. What else do we have? Asking stupid questions. So off topic. Clearly think gentleman is sharing his time and experience. You all don't appreciate real ones. Sit down and listen. Oh, squirrel. I'm going to take that as a compliment. Thank you very much. That was very nice of you. All right. Let's sit down and answer some of these questions. It's 10:30. We have a little over a half hour left to go. What do we have for questions? Get them in, get them out, get them in, get them out. Hey, Florida County, Florida, Georgia, cross country. You gotta love it. All right. Title here, 34. Are we selling calls? I just got here. Yep, that's what we're doing. Florida, Georgia, yes. The strategies are set up, covered calls, sell out. Okay, cool. Jasper wants to take a look at University of New Hampshire, UNH. UNH. It's actually United Health Group, right? Whatever. I like calling it University of New Hampshire. That's what it looks like to me. ETF, ARC. Beastly Dividends likes ETF, ARC. Okay, we'll take a look at that. My favorite stock is APU. Never heard of it. Tom, sorry. Damn, I am late for class. Sorry. All right, crazy. Okay, so Jasper, UNH, here we go. Take a look. Way up here, 650, and we drop down to 250. How many people, think about it, how many people panicked who bought over 600 and sold when it hit 250? Think about it. There's a lot of people that did. That's like a 60% drop. Can you? It's an honest question. Think about it honestly. If you buy a stock and it drops 60%, are you going to panic and sell? Or are you going to hold tight and say, you know what? I believe in this company. I'm going to hold on to it. Because not many people do that. As soon as the stock starts to drop, they panic and they sell because they think the world's going to end. Well, trust me, the world's not going to end. As a matter of fact, okay, we humans, we will come and go and the world will still be here. Think about it. The world's a couple millions old. How long have we been here? A couple 100,000? That's it. Anyway, let's keep on going. So here's the bounce right here. She bounces up and she's pulling back. So let's get a little bit closer. Okay, 30 days, we're at 280. We drop to 240. We shoot up to 310. Now it's time to pull back. Okay, because think about it right here. You bought them, 240. She jumps up to 310. 240 to 310 is a $70 move. A $70 move on a $240 stock, well, that's a pretty big jump. Yeah, so could this be where profit taking is starting? It could be, because that right there, my friends, is a nice profit. Now she's coming down. When she comes down a little bit further down here, maybe jump in again. Next. Mr. Nice Guy. There it is right there. United Healthcare. I want to get there. I got my shoes on. Let's go. Parashuruzi. All right. It's me. If you're doing like 30 Delta, that's on gonna win 70% of the time. Not necessarily so, but okay, I understand the math. Let's keep on going. Ted. Ted, why do you say 1% a week when most of your premiums are earning 2% plus per week? Well, Ted, I just showed you 6 companies. 6 companies I just showed you. Only one of them was paying 2% or more. Everything else was over 1%. 1% is my goal. That's my goal. So if I get 2%, I'm happy as a clam. But 1% is my goal. Hi, Osvaldo here. If it goes down and you lower your strike price, what if you get bought at a loss? Well, number one, Osvaldo, I take a. Oh, let me get a little bit closer because I'm not in frame in all the cameras. Yeah, I got 7 cameras going, so I do have 6 different sets of questions. So sit tight. All right, so Osvaldo. If it goes down, yeah, okay. So I check twice a day. Okay, once in the morning with my live morning trading group, and then once at night with you guys. So I take a look, like, what did my stock do today? So it always comes down to a numbers game, right? What did I buy it for? What did I sell against it? So what strike price did I sell? Where is it at now? What does that mean? And what is the safest play for me to, I get 2 goals: consistency of profitability and preservation of my capital. I want to make sure I don't lose. So I'm 61. I'm perfectly capable of going to work. Seriously, I am. But I've been working since 1973. And I think it would be a disservice for me to continue working when there are other able-bodied people younger than me who need the money and don't have a job. So I'm just doing society a favor. Say, you know what? I put in my 50 years of work. Your turn. What's up, my brother, Johnny Harris? How's it going? All right, Mr. Nice Guy. Do you do stocks under 10 bucks? Yep. If it makes sense, it makes sense. Some people get fulfillment from helping other people. Oh, Squirrely, thank you very much. Now, Squirrely, you got a point there. Because 2-3 years ago, well, I first started in 2011. Hold on, you're gonna like this. You like this one. Hold on, Squirrel. You're gonna like this. Oops, right there. Let's go here. Come on, let's go here. Let's go right there. This is my website. So I'm just floating around here. I'm not trying to sell you anything. All right, I want to go all the way to the bottom. These are all my trades from 2024. Right there. Here you go. My very first blog post. Do you remember back 20, 30 years ago? 20 years ago, was it? Blogs were the big thing. Everybody had their own blog. Well, I had one. August 31st, 2011. That's my very first blog post. What was I doing then? Exact same thing. Okay. And then I did a little bit of a what do you call it? Narrated a little bit. There was a huge drop in the last few weeks. We took a break from trading and waited for the dust to settle. We didn't take any losses as this year we were looking for a no-loss approach. Well, that was cool. Hold on. We dropped down to only a 20% return so far at the halfway point. So here we are July 6th, which is a little bit past half point. And I'm already at 20%. Our weekly average has dropped below 1%. And our monthly average is only about 3.3. So in 2013, in July, my average was 3.3 for the month. So what is that, like 39, 40% for the year? Okay. Even with the big drawdown, we are still above the average annual on our returns. We missed opportunities, blah, 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 blah. So anyway, my very first blog post, 2011. And you take a look at videos from... Ooh, hold on, stop moving. There we go. Look at this, March 23, 2013. 1-year chart, 90-day chart, 30-day chart. Doesn't that look kind of familiar? Think about it. Okay, moving sideways all year, last 90 days, looking at a channel close to the year's high. Last 30 still at that channel, looking for the dividend to make the push upwards. Right there, the 30-day. Man, that was 2013. Yeah, so I've been doing this for a while. And yeah, I've been posting for quite a while. All right, we don't need that. All right, back to there. Okay, so where are we now? Okay, Joe Berman, we already looked at, Southwest Airlines. Okay, next. DKG302, how are you? Eagle 1. Do you need 100 shares of stock to do a covered call? Yes, you do. Oh, Kevin wants to take a look at Kohl's. Beauty Bina. Hey, just popped up on my For You page. How you doing, kiddo? Eagle. Yeah, I already answered that question. Oh, Kevin wants to take a look at Kohl's. Kohl's was one of my great movers last year. Let's take a look. Kohl's. I got a lot of questions to answer. So this could be the last one, maybe the last one we look at. But Kohl's, look at this. Here's your high right there. I'm not going to count this one. That's an anomaly. Okay, here's your high, your low. Okay, sideways, down, up. Easy to see. 1365, 1365. The 14s are going for 28. That's 2%. 3 days for this week. 3 days. Okay, 22 August. 3 days. 29 August, 10 days. 5 September, 17, 12 September, every Friday. Every single Friday. So, look at this. The 1350s, 47 cents. That's more than 2%. Well, let's take a look. Okay, chart looks okay. This looks okay. So let's take a deeper dive into those numbers. Glasses. A year ago, we are at 20.45. The high of the year, check this out. We hit it, 6 times? Check it out. 21.32. One's here, one's here, one's here, one's here, one's here. That is what you call resistance, because it doesn't want to seem to go over 21.50. Okay. Well, she dropped down here. Here we go, remember? Second week of April, bottom. TDS day, shoots up, pulls back, back up again, 1365. Does that look okay to you? Do you like Kohl's? Do you like Kohl's at this current price? All simple questions. Say last 30 days. Here we go. Here's your bottom, shoots up, pulls back, shoots up, pulls back. Here we are right here. 1365, the 1350s there, the 14s, 28. Let's do the 14s just for the fun of it. 14 is right here. Where are we now? 1365. Where's 14? Right there. Very close. Are you willing to buy it and hold it until it hits 14? Well, guess what? You can get 1 or 2% every single week while you're waiting. All right, so let's take a look. This will be the last one we're going to take a look at. Then we're just going to answer questions. Get rid of this. Get rid of that. The 14 right there. One contract at the market. Here's Johnny. Buy one covered call of Kohl's. 22 August. That's this coming Friday. The $14 call option against the stock at the market to open. Here's the profit, $65. $13.35 is the investment. Well, think about it. If I'm going to buy a vending machine for $1,300 and it's going to give me $65 every single week, well, hell, I'll buy a bunch of them. Let's see what the numbers look like. Calculator, here we go. $65 divided by the investment, 13.35 equals a grand total of 4.8 for 3 days. I'm writing that one down. I bought me some Riot this morning because Riot paid 4% this morning too. So I said, oh, hell yeah, I'll take that. Okay, I'll take this one too. So tomorrow morning. Now, that is not a tip. That is not advice. That is not a recommendation. That is just me saying these numbers look good. I am going to do it. No. I did not say you should do it. You should do your own research. You should decide for yourself. Does it make sense? Then do it if you want to do it. It's not a recommendation. Seriously, it's not. I'm just telling you. It's an observation. I like it. I'm going to do it. That's all it is. Don't blow it out of proportion. No, James did not tell you to buy this. No, it doesn't work that way. All right, we got 9 minutes left. Let's take a look at some questions. Oops, let's get back into the camera view so people can say, oh, who the hell's talking? Whoa, okay, there he is. All right, questions. Here we go. Okay, so Rick likes the strategy. Thanks, Rick. Sell as I warned you. It's about to get nasty. Save man, woman, peace. I have no idea what you're talking about, but okay, it's not right for everyone. Is it always weeklies? For me, it is, Rick. Okay, just for me. Okay, you have got, so you people out there in, whatever world, you've got to figure out what makes sense to you. Think about it. It's your money. You figure out what is best for you. Maybe it's real estate. Maybe it's art. Maybe it's coins. Maybe it's stamps. Maybe it's stocks. Maybe it's options. Maybe it's futures. We're all different. We all have a different journey. Dukes, how are you doing today? How do you begin? Ask a question. That's it. How do I begin? Okay, well, just keep following. Number one. That's number one. Number two, decide what you want. Okay, because you have to invest your money somehow. Because I don't know how old you are, okay, but we all know once you're 18, money makes the world go round. Okay, you need money to put gas in your car. Well, you need money to buy a car. You need money to have insurance, to have a car. Then you need a place to live. And then you need clothes and you need to feed yourself. Well, guess what? All of those take money. So at some point in time, when you retire and you are too old to work, because you got 3 opportunities already, here they come. Number one, it's called aging out. It means when you are too old, you're going to go to work and your boss goes, hold, Duke, hold on. You are too damn old. Keep your ass home. You are a liability to everyone else. It's just not safe having you around. You're too old. Well, legally, they can't really say that, but you know what it means. At some point in time, okay, when you're in your 80s, you cannot do the same things you could do in your 20s and 30s. It's just a fact. Terribly sorry. Okay? Now, Chuck Norris, he can. He's a freaking anomaly, but that's Chucky for you. But besides the point, at some point in time, 3 opportunities. 1, age out means you're too old to go to work. Number 2, you can toe tag out, which means you die on your way to work, you die at work, or you die on your way home from work, and you get no golden life whatsoever. Sorry, I know. At my point in my life, trust me, as the older you get, the more and more of your friends, relatives, and people you know keep passing away. And the older you get, the faster that goes. Hey, sweet Dan, thanks. Oh, it's all gone. The older you get, the more it happens. Okay, so when you're young, maybe 1 a year. As you get older, it's 2 or 3 a year. And then when you're in your 60s, it's 5 or 6 a year. Imagine when I'm in my 70s, it's going to be like 8 to 10 people that I know every single year passing away. It's just a part of life. Sorry, it is. I'm 23. Do I need dividend stocks? Okay, Tom, I can't tell you anything. I have no idea who you are or what you're looking for. But Tom, at 23, if you're here and you're piquing an interest about thinking about investing at 23, there's a good possibility you can retire at 33. But you shouldn't. You should contribute to society for as long as you possibly can. Find something you enjoy doing. Okay, if you enjoy doing what you're doing, it's not like a job. Okay, if you love what you do, it's not really a job. When you know what? Let's go to this. Let's do this. Okay, this is what I used to do. Years ago, I made aquariums for museums and public aquariums. So if you ever been to, one of the big aquariums like the National Museum, the National Aquarium, the New England Aquarium, Lowry Park Zoo, there's a lot of companies I actually just work from. This is what I used to do. I used to make aquarium exhibits for museums, aquariums, and very rich people, resorts, doctors, all that kind of nice, neat, fun stuff. I was very good at what I did, and I enjoyed doing it. Okay, I would go to work, and I wouldn't even think about the time because the time just like floated away because I enjoyed what I do. This is what I used to do. I don't do it anymore. Well, because number one, I'm too old. No, I'm not too old. I probably could do it, but I can't come up with a good reason. I have other interests in my life nowadays. So besides the point, at some point in time, you are going to retire. You need to figure out what you're going to do with your money. Figure it out. Give it to someone else. Let them invest for you. Learn to do it yourself. Can we take a look at CRM? We're going to take a look at that tomorrow. Okay. What else we have for questions? CRMs seems very oversold. All right, Kyle, we'll take a look at tomorrow. Shayla, good evening. Mark, good evening. Kyle, I bought 270 call CRM expiring January 27th. Why? Kyle, my question is why? Okay, so the reason why I say why is here a few reasons. Number one, 80% of all options expire worthless. So you bought the 270 calls. So you paid X amount for those 270. Wait, let's find out exactly what you did. Hold on. Let's get rid of this. Let's get rid of that. Let's change this back to that. Let's go here. Let's get rid of that. Let's CRM. Okay, you bought January 270. All right. So you bought the 270 call for January. Okay. Well, we're in August right now. 270 is right here. But here's the thing. You're not looking at 270. The reason why you're not looking at 270, because if you bought 270, hold on, let's get rid of that. If you bought 270, you paid $15.40. $15.40 for the right to buy it at 270. Well, guess what? $15.40, you got to hit 285.40. Hold on a second. Where the fuck is 285.40? Okay. All right. All right. You bought 270, which is right here. Okay. Okay, you bought 270, which is right there. Where's my pen? Right here, 270. Stock's right here. You bought 270. No, you didn't, because you paid $15.40. So your break even, just to break even, the stock has to hit 284.70 right here. Just to break even, it's got to hit 284. So let's go from here to here just to break even. Anything over this is going to be profit. So why the hell would you do that? Because see, now it's got to go from 246 to 285. just to break even. And then anything over 284.50 or 284.50. Sorry, 285.40. Sorry, anything over 285.40 is going to be a profit. So what if it goes to 285? Wait a minute, 285.41. You only made a 1 penny profit. You tied up all that money for all that time to make a 1 penny profit, and the stock still has to go up all that way just to break even. Do you hear that? Just to break even. I don't buy options, and I used to years ago. I don't anymore because 80% of all options expire worthless. And if you're buying an option for January, it's got to go all the way up to here just to break even. So you might know something that I don't know, and that may sound good to you, but to me, no, I want 1% a week. So from the time from here, where are we? That's 150 days. 150 days divided by 7, that's 202. I can do, is that right? That can't be right. It's 150 days. 150 days divided by 7. Oh, that's 22. So that's 22 times I can get 1%. So you take 1% and you multiply by 22, not 22%, because it's 1% first week. Then it's 1% on top of that one. So it's compounded. So it's like a 50% return. And the stock doesn't have to do anything. Anyway, now I don't buy options anymore. And I'm not telling you you shouldn't have done it. I'm just saying that the stock has to go to 285 before you even see a penny of profit. Just doesn't make sense to me. Jen Prinka. Hi, James. It looks like you've holding about the same stocks for several weeks. Yeah. If a company's giving me the same, if a company gives me 1% every single week, why would I sell it? Think about it. Arrow. Will your company be a Fidelity format or a Charles Schwab format where we can invest? Okay, Arrow, I'm not 100% sure of that yet. We're still in the talks with paper pushers. I'm not a paper pusher. You put me in front of a camera and I can make money all day long doing this. Yeah, dotting I's, crossing T's, that's not my thing. See, I know where my shortcomings are. And my shortcomings are paperwork. You know, crossing the T's, dotting the I's, making sure everybody's okay. Yeah, that I have to pass along to someone else. I'm good at what I do, but there's so many things I'm not good at. So I have to pass that along to someone else. So Arrow, hang tight. You know, it's a long time between now and January. Okay, IMG, SMC, I will have to wait till tomorrow. Lou, how you doing? Eddie, I need to sit with you for 2 weeks. Eddie, I'm here every night. Okay. Schmidt said, I says, yes. I have no idea what we're doing. To do covered calls, we have to own 100 shares first. Yeah. Merv, Comcast, we'll take a look at tomorrow. Thank you. John, if you're taking profits on Intel, do you just let your shares get called away? John, it ain't a profit until you take it. And nobody ever went broke taking profits. So if I bought it here and it's shooting up, yeah, I'll let it go. Risk $3,000 for 30 or 40 a week. A vending machine, give at least 40 a day. Okay, Pete, you do know it was just an analogy, metaphor, so to speak. Okay? Austin, how are you doing today? 86 is in the house. Definitely sell, just too scary. Okay, John, I have no idea why it's scary. I don't think people understand the value you're giving here for free. Extremely grateful. Thank you, 110 Beast. Yeah. Hey, James is the buy. Thank you, Laurie. Oh, Schnitzel Breath is back. Cool beans. Somebody hit the wrong button. Yeah, I hit the wrong button earlier today. It was funny because I'm sitting there talking to people. I said, oh, damn it. I did it on live TV. Yeah, Did it live. Hit the wrong button. Not all premiums are created equal. You're absolutely right. John, does it make sense to let Intel get called away so I can find a better entry somewhere else? Absolutely. But remember, John, when Intel goes up, you take your profits. But you keep an eye on Intel for when it drops back down again to come back into that area where you like it. So when she goes up, let it go, bye-bye. And when she comes back down, jump back in again. Because remember, you liked it in the first place. So grab your profits, wait for it to settle, and then jump in again. Sweet Den, I enjoy my life. I mean, there's a few minor kinks I'd like to iron out. Still dealing with mom's house. You know, we had a new roof put on. And getting the paperwork, oh my God, it's a pain in the butt. Sweet Den, I'm my own. Oh, I love my job. I am my own boss. Hey, I love my job too. I do. Your aquarium is gorgeous. Thank you, Laurie. It's in the other room. So we're thinking of doing another podcast, and I'm going to be sitting right in front of the aquarium when I do it. See, I'm in the different room now, so it was just on the screen. Tom's going to make it. Stick around and absorb some info. It'll create cash flow for years to come. Cool. I have no patience. Wow, January 26th. I have no idea what that means. Good stuff. 86. Cool bean. All right, so we're done over here. Okay, so we're done with the questions over there. There's no questions over there. Done with questions there. And so we got here and here. That's it. Okay, so we're done with these questions. Could be done. I'm not going to get all of the questions on YouTube, and I feel bad for the people on YouTube because I do need a moderator on YouTube. Now, next week or the week after, my son's going to be joining, and he's going to be the moderator. So he is going to be taking out all the turds, all the trolls, just eliminate them, and then he's just going to give me the questions. Okay? And it will be phone in. So some of you, if you want, you can phone in. Right? I don't know if you ever watched Frasier. You watch Frasier? Roz, who do we have next? Well, Frasier, we have Tom on the line. Tom thinks Intel's a great choice. What are your thoughts? That's basically what we're going to be doing. Okay? Okay. Derek Dobak. Terry going on. Beautiful Bina. Good evening. Parsharuzi. That's an interesting name. Osvaldo, is there a reason some stocks pay higher premium on sell calls, higher risk? Interesting question. They're all different because there's a market maker, and it's not the same market maker. Okay, each company has their own market maker. Okay, Jen Princer, you're welcome for the info. Eagle, we did that one question. Dimophoric. How do you get the screen on the right? Screen on the right. Screen on the right. This screen here. Well, that's easy. Number one, and I don't know what to call it. Seriously, I don't know what to call it other than the vertical line in the middle of the screen. And that would be this one right here. That vertical line. So you can grab it anywhere you want. There's a little arrow right there. If you click on the little arrow, it just disappears. See? Boom. There it goes. But now it's all the way over here. And the little arrow's right there. So I hit that little arrow again, and she pops back up. I also can take my cursor and put it right on the line and drag it either way. See? Okay, so the screen on the left, the screen on the right are all controlled by this up here: monitor, trade, analyze, scan, market watch, blah, blah, blah. These are all your control buttons. So if I click any one, monitor changes it to that. Analyze changes it to that. Scan changes it to that. Market watch changes to this. Chart changes it to that. And then you have a whole bunch of other stuff you can look at. because there's a whole bunch of stuff in each one of these drop downs. Now, Thinkorswim, okay, has a huge amount of information. Now, here's something, you're going to find this rather crazy, but it's true. Okay, I've been using this thing for over 20 years. I know about 2%. That's it, 2% of what's on Thinkorswim. 2%. Because 98% of what's available here has absolutely nothing to do with what I am doing. So I don't even bother looking at it. I look at what do I need to get me to where I want. Other than that, I don't want to look at it because it has nothing to do with me. Okay? So how do I get here? Trade, it's right here. Okay? And then I can do all products, which is there. I can do Forex trading. I can do futures trading. I can do active trading. I can do pairs trading. Okay? I can do any of that stuff. I don't because I concentrate on one thing and one thing only. That's it. Yeah, Schnitzel Breath, you're right. Tom Sosnos did this. It's a great platform. It really is. I've been using it for 20 years. But see, I don't even look at any of this stuff because it's got nothing to do with my goal. My goal is simple, safe, predictable, consistent, 1% per week. 98% of this wonderful little tool, I have no clue, and I honestly don't care about it. Isn't that weird? I don't care about it because it has nothing to do with me. So I'm only looking at trading all products, which is basically stocks and options. Okay? Okay, here's the stock information. That's it, just the information on the stocks. The opening price, the high, the low, the close, the change, the bid, the ask, the volume. That's all the information you need to know on the stock right there. Okay, option chain, well, that's what I do. And then on the left side of the screen, the left side of the screen is the same thing, but it's directed by different buttons. Okay, this button up here. Okay, that little arrow. You touch that little arrow, it makes things do weird things. Down here, you can choose anything else you want to add to it. All right, so let's do this. Hold on, I need the glasses for this one. Okay, if I click on that little arrow, that disappears. Well, if I click on this right here, well, there's my watch list. Which watch list? Well, I have a whole bunch of them. Okay, CBO stocks, there we go. Down here, docs list right there. What else do we have? Warren Buffett's list right there. See, I can put anything I want in the watch list. I can create my own watch list. Dividend Kings, Dividend Aristocrats, Dividend Champions, Docs list, Mikey's list, anyone's list that I want to copy and take a look at. I can put it there. What else can I put it there? Well, I can use a calculator. Well, there it is. I can add anything down here. Okay, look. Account information, calculator, chart describer, dashboard, FC currency. I can all this stuff I can put anywhere. I can do whatever I want on this platform. But guess what? I have it set up in a certain way, and it's been the exact same for the past 20 years. That's what I want to see. I want to see the chart. I want to see what the stock's at. I want to see what the option's at. That's all I want to see. And if I want to buy something, I take my little cursor and say, buy, let's buy that. There you go. And there it is. It fills it right there. It sets everything for me. Why do I need to learn everything that's there if 98% of it has nothing to do with what I want to do? Okay, Joey V, what's the graph? 1 minute candles? No, they're 1 day. Okay, I live my life 1 day at a time. That's it. I'm not in front of the computer that long to look at the minute chart. Don't do it. What chat are you reading? Hotch Nast. Well, I finished up with that one, that one, that one, that one, and this one. So I have 2 chats left. This one here and that one there. So I'm going to try to get as many as I possibly can before the night is over. All right? Hudgecast, you can always lose. Yes, you can. Guess what? You can always get hit by a bus. You can always get run over by a train. You can always have a tree fall on your head. You can always get hit by lightning. If you want to look at it that way, yeah, a lot of things could happen. That's why they call them accidents. Okay. How long before I can grasp all of this? Katamatu. It all depends on you. Okay. Number 1, never buy something you don't understand. Number 2, never sell at a loss. Number 3, make sure the company's always profitable. Number 4, weekly options only. And number 5, make sure the numbers work. My 9-year-old understood it in 15 minutes. If it's not on the list, it's an absolute no. Okay, if you take a look at the calendar, these are the only stocks I want to take a look at this week. Just these. That's it. I don't want to look at anything else. I don't know how much money you have. But me, I will maybe sell 2 stocks and then buy 2. Well, 2, 4, 6, 8, 9, 10, 14, 16. This week right here is 16. That's just this one list. I got a whole bunch of lists, but there's 16 companies right here. I'm only buying 2. Which 2? Well, which ones make the most sense? Which ones are the safest for me to hit my goal? Okay, so Katamitu, okay, you have to decide how much time and effort you want to put into it. So for a 9-year-old, if it's on the list, yeah. Does it make sense? Yeah. Time to start selling those t-shirts. Yeah, Schnitzel Breath, would you believe it or not, I actually have been paying for a Shopify store for the past 3 months. I got no idea how to link them together. I have none. Anyway, let's keep on going. I really like CRM, seems you very oversold thoughts. I like your strategy. Thank you. I would like to know your opinion on the differences AI-focused EFTs, ETFs. Okay. I don't really trade very many ETFs because not a lot of them actually have consistency of profitability and weekly options. Igor, deal only with firms that take your money and invest it for you and make money themselves. If you make money, not just make money on trades, regardless if you do or not. Not quite sure I agree with you there, Igor, because I haven't met a single money manager or investment advisor that pays over 40 or 50% per year. I haven't. That's why I do it myself, because nobody else is getting those kind of returns. So I'm going to disagree with you there. Do you ever No, I don't use AI at all. Sorry. So 110 Beast, I've seen way too many Terminator movies, and I've seen 2010, 2001 A Space Odyssey. Yeah, I don't trust computers. Heath, I gave the sauce last night and short PLTR. Well, good for you. I don't do PLTR because the profits aren't as consistent as I would like them to be. What stocks should I go with to start? Okay, Kay, I can't tell you that because I have no idea of what your risk factors are, what you're looking to get, what you're looking to do. I know nothing about you, so I cannot do. You are doing a podcast? I had a podcast for about 4 or 5 years. I have over 900 episodes in my podcast. And then the podcast company changed everything. So I can't do the podcast anymore because I refuse to jump through the stupid hoops they want me to jump through. So yeah, I'm going to start another podcast somewhere else with a more friendly podcast company. TD USA, summarize, is a goal to make 1% per week in companies profitable for 25 years or pay dividends 25 years. No, at least profitable for 20 years. That's 2 decades. Okay? I do not want to invest my money in a company that's not profitable. Ish, mi amor. ¿Qué pasa, amigo? Good morning. Are you dumping? We are dumping, folks. O'Sheen's taxes. I have no idea what you mean by that, but okay. Open the pod bay doors. I have no idea what that means. Do you have to write up with rules? Do you have to write up with rules? Yeah, of course I do. Ooh, Dan, Home Depot, we'll look at it tomorrow. Sent you a message through the website. Cool, I'll take a look at it tomorrow. All right, so all the questions are done except for YouTube. Now, YouTube, Club Med Tom, hey James, have you had a chance to check out the tax strategist and could you share? What do you have a list of stocks you currently trading? Mark, of course I do. You ready? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Okay, Pow Noob, is Amazon a good buy-in? Oh, I don't do Amazon. Sorry. What was the last stock that paid 4%? Ooh, wait a minute. That was Riot and Kohl. Both Riot and Kohl's are paying 4% this week. Yeah, I bought Riot yesterday. No, I bought Riot this morning. Now I'm going to buy Kohl's tomorrow. Rory's Stories. Yep. We're young and broke. Hard to start on stocks when you don't have. Uh-oh. I missed it. I missed that question. Damn it. X seems very oversold. Okay. Who pays weekly? Who said that? Arakan Elite. Who pays weekly? CBOE, Chicago Board of Options Exchange. You go there and they'll tell you every single company or every single stock that has a weekly option to it. ULTY pays weekly. Very risky though. Igor, high yield savings accounts make you 4 or 5% per year, and it's not an investment. It's just your money work for you. Now, Igor, don't get me wrong. You know, some people are perfectly okay getting 4 or 5% per year. Okay. Well, you're definitely in the wrong place. Okay, because see, I have no interest in 4 or 5% per year. 4 or 5% per month, yeah, I'll do that. But per year, yeah, no, thank you. Knowledge is power. You're absolutely right, Matt. You got a food twin. Okay, I have no idea what that means. Okay, APL, we already looked at Apple earlier. Any options on TSLY? I got TSLL, but I don't have TSLY. Yep, I already have 2 of those. Apple. We got to look at CRM and FedEx. Or we already looked at FedEx. We already looked at Apple. CRM we have not looked at yet. CRM. Oh, right there. Check that out. Nice move to the upside on CRM. Glasses. 246. The 247s are going for 269. Okay. Well, that looks good if you like CRM. Okay. Now, I'm not very familiar with them because I have no idea if they have consistent dividends or not. Okay, what else do we got? Igor, Apple is too expensive to buy in and earn a little amount. There's a way better stock out there that costs way cheaper and brings bigger returns. Now, Igor, I got no problem whatsoever taking a look at what you're talking about. None. Now, I did buy Apple 2 or 3 weeks ago. I got my profit on it. Now it jumped. Time to get out. Now I'm waiting for it to come back. I like Apple. And when Apple comes back down again, I will buy it again. You sound like Saul Goodman. Okay. Apple, I trade Sauls. Are options the only way to make weekly profits? No. Which Kohls or Kohls? Mike, KSS. And Mike, it's not a tip. It is not a tip. It's not advice. It's not a recommendation. Okay, Enron, do I do any leaps? I do them on calendar spreads. And no, we're not going to talk about that. I only talk about one here tonight. Careful, billionaires want your money. And this is basically handing it over to them. Totally relaxed. You're going to have to explain that to me in a manner which I'll understand. Because I've been doing this for the last more than 15 years. And I never had any billionaire say, hey, I want your money. I use it to help mitigate inflation while I decide what I want to do with the cash. Okay, makes sense. I love your classes. Keep them up as long as you can. Thank you, Enron. NASDAQ US 100. Okay, how much money do you have? Well, on me at the moment, I don't have anything. Oh, wait a minute. Wait a second. Hold on. I got a nickel right here. Rocket Labs, not enough. Hasn't been around long enough. What about capital gains? Ooh, beastly dividends. Here you go, capital gains. If you are worried about capital gains, your best bet is to chat with a tax strategist. It is your responsibility to pay as much or as little income taxes as you want. Okay? Now, there's a lot of information about income, federal income taxes, that the powers that be don't want you to know. So that is your responsibility to find that out. I don't tell people anything about taxes because it does nothing but get me in trouble. And I would prefer to be left alone. Okay? So yeah, I'm not going to give you any advice on the taxes other than talk to a tax strategist or a tax planner, not an accountant, not a CPA, okay? No, a tax strategist. And the very first question you ask a tax strategist is, how much do you pay in taxes? Very well put in taxes. Okay, J-Man, what happens when the call you wrote is exercised against your position? Well, J-Man, if the call is exercised against my position, means the person is going to take those shares away from me and pay me the target price that I'm looking to make a profit on. That makes sense, J-Man? Think about it. If I buy this stock at 246, if I sell somebody the rights to buy it from me at 245 and they pay me $3.90, what am I walking away with? I'm walking away with 245 plus 390, also known as 348.69. Okay, you add the two together. That's what I'm walking away with. What did I pay for it? I paid this. I'm selling for this plus this. I'm walking away with a profit. Do I really care if somebody buys it for this price? No. As a matter of fact, I want them to. I want to buy it here. I want to sell it here. I want to collect this. And then I want to say, next. Who is next? I have no desire to hold on to anything. None. Because not once in my 61 years, not that I was paying attention, but not once in my 61 years have I ever seen a hearse go by with a U-Haul. Never. So whatever it is you so badly want, you so badly desire, you ain't taking it with you. So take it for what it is. All right, so done over here, done over here, done over here. You're not quite done here. AMC I'll get tomorrow. Igor, you want high returns, go to completely another stock market. Right now, India and China market is hot. You can't go wrong. This one is a freebie. Thank you, Igor. I bought into Bitcoin when it was 11. Good for you. Are you charting right to left? Why? Am I charting right to left? No, I'm charting left to right. You're just seeing it backwards because YouTube is backwards. Okay, there is no opportunity for me to flip the screen. So you're just seeing it that way. Okay. Okay. CRM and FedEx seem like time to buy. All right, Kyle. Look at what the red X is. I don't see a red X. Sorry. To close browser. Okay. Who are you selling it to at the end of the week? Joey, don't know, don't care. Interesting thing about the stock market. You have no choice on who to buy from and who to sell to. You don't. You got one person and one person only. That is the market maker. The bid is what you can sell for. The ask is what you can buy for. That's it. Sell, buy, sell, buy, sell, buy. You can only sell it and you can only buy it from the market maker. It means I cannot sell you any stocks. You cannot sell me any options. You got to go through the market maker. Sorry. It just is what it is. John, I'm still new. 125 strike price, pays 71, almost 3% Intel. Yep. Okay, sorry, John, but I'm going to say I'm not doing Intel this week because, hold on a second, INTC. What do you think, John? This is where it is today. Okay, here's where it was. She dropped. Here's the bottom here, and she shot up. This is today, a new high. Do you really think, John, do you really think just because you buy it, it's going to continue going up? Before you do, what was the price at the low? $19. What was the incline? From $19, it shot up to 27. The difference between 19 and 27 is $8. $8 on a $19 stock is just about a 50% increase. So if the stock just jumped up 50%, what makes you think it's going to keep going up if you buy it? This is just my humble opinion. It's not advice. It's not telling you what to do. If a stock jumps up to 50%, yeah, I'm taking my profits. That's me. Okay, it's not a profit until you take it, and nobody ever went broke taking profits. All right, I'm done. You guys have a great night. Get questions. I can't do all the questions on YouTube because YouTube, some of you guys is just out there. So yeah, I need a moderator on YouTube. Way too many questions. Thank you for the information, John. You're welcome. Okay, you guys have a great night, and we will see you again tomorrow. Tomorrow, we'll see you tomorrow. And broadcast, lovely. And you guys over here, have a lovely night. And now, the end is near.